Okay, your client has given you discretionary authority to trade her account with a beginning balance of 100,000. Market conditions have been volatile for the past 6 months, and her primary objective is long-term growth with low to moderate risk. A review of the account at the end period shows the Dow Jones has dropped by 2.2%. The client's account value is 105,300. During the period of commissions from trading totaled a bit over 6,000. It is likely your principal will now principal, means your supervisor.
Mhm. Well, just congratulations on helping suggest that your client contact the client about investing more money. No, I guess A.
Hey, no, 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 no. If you are generating $6,000 on commissions on
Oh, okay.
$100,000 in principal, that's kind of out of the realm of things. You might be churning the account.
Yeah.
Most firms think you could do about 2% without churning. So 100,000, I should be able to make 2,000. That's just a guesstimate, but 6,000 on $100,000 account means you're probably trading a little too frequently.
So you said what's a typical amount?
Typical is like 2%. I know most firms have a 2% where I call you in and I say, in this account, I say, Jennifer, most of our reps at our firm, every firm has a number. That's a pretty common one. But whatever our number is, Jennifer, our average reps on $100,000 account would make a couple $1,000. And you are making 6,000. You go, yeah, I'm a good producer, aren't I? We'd like it to you bring it. I've seen people lose their jobs because they have good production, but this guy, Air Broker, was saying, hey, you got to bring it into the metrics that we're telling you. And he didn't, and then they fired him. He got a job because nobody else cared about how he was generating the commissions, right? So
Yeah.
churning. What is the most typical organizational structure of private equity investments?
Private equity.
You're going to get a question on business structures.
Yeah. So limited partnership.
Right on, right? The general partner manages the private equity fund or venture capital fund or hedge fund, whatever the case may be. And then the limited partners provide the money. Very testable. And remember, partnerships don't have liquidity. You can't get in or out of a partnership without permission of the general partner, right? So you wouldn't put this in anybody's account who needs their investments to be liquid, right? What's the easiest one of these to form and
Uh,
dissolve?
the sole proprietorship.
Right on. Which one has a maximum of 100 shareholders?
S corp.
Which is the only one that has retained earnings?
Which one has retained
Yeah,
earnings?
only one of those has retained earnings.
Good one. I guess C corp.
Yeah, right. Corporations make money, pay taxes, and they pay a dividend, right? The rest of those are flow throughs. Yeah, flow through.
Which is what I was going to say.
Yeah, right on. Well, there we go. Here it looks like we're on a roll here. All the following would flow through as lost to limited partners except
Um, so it's all like, but not like the other.
yeah, that's one of the things we can do here. And I think we're already in a heavy partnership mix. You're not going to get this many partnership questions. They won't be that difficult on the actual exam.
So principal repayment on partnership.
Yeah, there you go, right? Your money coming back to you
Yeah.
is not going to be a loss. So when we're paying down partnership debt, all these other things do flow through,
Right.
are part of the loss. So that's it, right? Because of repayment. What prepayment, right?
Mhm.
All the following information is required on that SEC registration form ADV, except
It's D.
it
No,
is not D. We do have to tell you how we're going to be compensated. Now be
perfect.
careful on these except questions because it's not so much that you know the except, it's that you know what is required, right? So I call these, make sure you don't walk onto the wrong thing. If we get rid of the except, this is the takeaway intellectually. What you do have to have on the form ADV. What you definitely have on the form ADV is, are you an S corp? Are you an LLC? Are you a C corp? You definitely need to have the name of your advisory business on the form ADV, and you definitely have to say what your compensation model is going to be.
Right.
We don't have to tell you the securities holdings of the principal of the firm, right? So the answer here is C. And we're trying to get a mark, so I'm going to mark you wrong. What did you say? Did you say D?
Oh, yeah.
Oh, what form of efficient market hypothesis suggests that fundamental analysis and insider information may produce above market returns?
I always have a hard time with this
It's very testable. So that's why we're doing it. So don't get too
word.
vocal. So, which form of efficient market hypothesis suggests that fundamental analysis and insider information may produce above market returns? So, I like to start. Here's how I do like to do it. I like to take the first thing. Strong means nothing works.
Right.
Strong means nothing works. And weak means technical analysis doesn't work. So, if technical analysis doesn't work, well, then that means something may work besides technical analysis.
Fundamental.
Yeah, it would be the fundamental analysis might work, and
Right.
that's going to be the weak form because weak form says technical doesn't work.
Yeah.
Boom. And then semi-strong would say that fundamental analysis doesn't work.
Right.
Cider
But it's
information.
always how they like word it that I like messes me up because I know.
Yeah, there's no such thing, by the way, as
You
semi-weak,
know what I mean?
right? So yeah, so I think you're gonna get at least one of these.
Mm,
And the thing to know is with weak technical analysis doesn't work, strong nothing works. Doesn't mean we're not going to make a recommendation. Strong nothing works. We put you in an index fund. You're going to say, Dean, I'll just take the market return. Thank you very much. Which of the following acts requires publicly traded corporations to issue annual reports? I would add, and quarterly reports as well. This is called sources of financial information.
public traded would mean it's
Yeah, Costco, Starbucks,
primary
Netflix.
market, which is 1933.
33 is for the IPOs when we initially go public,
Right. So this
right?
is asking,
After we're public, it's going to be 34. So 33 is the Prospectus Act. The Prospectus Act. 34 is people and places. And so the answer here is 34, right? You're the SEC, right? You're going to send your annual report and your quarterly reports into the SEC. 33 is only about IPOs.
right.
IPOs. The capital asset pricing model is based on several limiting assumptions. Which of the following is correct regarding the capital asset pricing model?
Well, it's not D.
You're
um,
correct. It is not D.
But it's an A normal, isn't it? We do know everything about the market. We expect
Mhm.
that. Honestly, guess my gut would be B.
Yeah, you're correct. Right. The Sharpe ratio is getting the highest return per unit of risk, right? I
Or I
always
just,
joke like if we
I
having
just
a,
wasn't sure if it was part of
yeah,
Kaplan.
it's called the efficient frontier.
Yeah, exactly.
The efficient frontier. Then these portfolios are called the feasible set, right? And it's like learning a foreign language, right? So there's a lot of terms here. I always use the Sharpe ratios like in a beauty contest. Like we're both competing for the client's money, and he gives you, Jennifer, $1 million, gives me $1 million, and says, "Hey, Jennifer, Dean, whoever at the end of the year has the most money, that's who I'm getting my account to." And we both come back, we both got 1 million too. And you say, "Gee, it's a tie." He says it's a tie. I go, "It's not a tie." And you go, "What do you mean it's not a tie?" I said, "Well, Jennifer was foolish enough to send me a copy of her portfolio, and I ran some analysis on it, and I have a higher Sharpe ratio. So even though we both made 1 million too, or come on with 1 million too, I took less risk than
Hmm.
she did. So I'm the winner. My
Right.
portfolio is more optimal, right? Because I got the same return without taking that risk. So mainly a definitional question. And then the Sharpe ratio, I won't make you do any math at all on that. Just knowing that a higher Sharpe ratio is better because that means we're getting more return with less risk, right? And that's, by the way, that ties into modern portfolio theory, right? The whole point of the theory is to maximize our returns while minimizing our risks, right? Which of the following statements are true?
Systematic cannot be diversified. Can be diverse. D.
You are correct. D is in dog. What's the easiest way for most retail investors to diversify?
Great question.
Mutual fund, right? Mutual funds. Do mutual funds is a good way to mitigate unsystematic risk by diversifying it away, avoiding selection risk. But if you are in a mutual fund, do you still have systematic risk? You certainly do. Risk prevails despite your diversification. Which of the following investment strategies would be appropriate for an advisory client with a 20-year time horizon before retirement?
I had this one yesterday. Three. Appropriate for an advisor client. Well, holding more stock. It's
Yeah, if you have a long time horizon, you'd want to hold more stock for sure. I
so
would consider 20 years. These are pretty subjective, but I assume 20 years is a longer term horizon, right? So I'm assuming that if you're 20 years to retirement, what are you retiring at? 65, let's call it what? 20 years would be 45. So appropriate for an advisory client with a 20-year time horizon. I'd say, yeah, I think we should hold some more stock. Yeah. And that means if we're holding more stock, that means what?
we're holding less cash and fewer bonds.
That's right on 1, 2, and 3. Good job. Mr. and Mrs. Williams are a retired couple receiving most of their income from a diversified portfolio of high quality bonds and preferred stock. One of the reasons that life insurance might be a useful addition to their overall planning is that. You're going to get a couple of insurance questions. If you miss your mark and you tell me it's because of insurance, I'm going to say, I don't know about that.
Yeah, I didn't get a lot. In addition to that, I currently have income from Well, A doesn't really have anything to do with it.
Exactly right.
B upon the death. It's like, well, that's not really a reason to get it. Reason for the overall plan. Well, when you do have a death benefit, you are tax free on the income. But go with B just because it.
Yeah, that's the right answer, right? And say, hey, listen, it wouldn't be nice if you could cover the cost of everything, not have to liquidate any investments to pay the estate tax.
Yeah, it's the only thing that actually is doing something.
Yeah, life insurance is a part of most people's estate plan, right? For that very reason. An agent is discussing a specific bond that would be a good addition to your client's portfolio. The client comments that the nominal yield is lower than the current yield. The agent would explain the bond is.
At a just
Are you familiar with the teeter-totter seesaw?
right. Yeah, so it'd be at a right?
What's that?
It would be selling at a discount.
Perfect. Excellent. The Smiths are saving money for a down payment on a house. They have 25,000 in cash, and they estimate that in 5 years, they will have approximately 31,000. If they deposit cash in the saving accounts, that compounds interest yearly. To calculate the $31,000 amount, the Smiths determined
They have 25. Here's 31. Calculate the 30. So 31 is the future value of the 25.
there you go. That's exactly right. So they calculated the future value of 25,000. That's exactly right. I love the terminology. I like this question, right? Right. So here, let's just go over them. The present value is 25. That would have been the answer if we had done this. If I would have said the Smith need a future value of 31,000 for a payment on down payment on the house. If they invest at X rate, what would they need today? And we'd be solving for the 25. Right. And then net present value would be a difference. There is no difference here. And then the internal rate of return, we don't have that here in the question, Jennifer, but that's what turns the 25 into 31,000. Right. So the internal rate of return is whatever return would take 25 to 31, or we can take it from 31 to 25, but internal rate of return means what takes the present value to future value. I used to use internal rates of return in investments when I say, Jennifer, if you invest in this private equity fund and give me $1 million and we can get an internal rate of return of 20%, here's what your $1 million would look if it didn't have, we have an internal rate of return of 20%. No guarantee we're going to get that. My friends at FinRight, they had an email where I said that, and they took exception to me telling people that $1 million would turn into X based on an internal rate of return of 20. I said, listen, I was just explaining math to them. I did not say, that that's what's going to happen.
Um,
An investment advisor registered in state A who has no office in state B is exempt from registering in that state if during any 12-month period, the advisor limits the retail clients in state B to
5. See,
yeah, de minimis, right? de minimis. Your firm's onboards a new investment advisory client. Which of the following would be most appropriate way to obtain information about the client's objectives and constraints?
Good. No. Okay.
I think, yeah, you can do this through process of elimination, right? I mean, all those other ones are ridiculous, right? I said, Jennifer, based on your tweets, I've got a recommendation for you. Under Reg D 506B, private placement offering exemption, which of the following statements is true? Which of the following statements is true?
Well, they can't sell them to unlimited.
Right on. Good job, right? This is the version where you can have up to 35 non-accredited investors. So you're absolutely correct that B is not the answer, because you can have an unlimited number of accredited investors, but only 35. So you're on the right track. So B is not the answer.
Just for my parties. I know that about D. I know that there's definitely stuff about advertising.
That's right. One of the big difference between 506B and 506C is with 506B, because you have those 35 non-accredited investors, you can't advertise or solicit. If you kick those 35 to the curb, 506C, and just tell, hey, you're not going to have any non-accredited investors, then you can solicit. So 506B, up to 35 non-accredited investors, but can't solicit or advertise. 506B, no non-accredited investors, but you can solicit and advertise. So you're right, it's not B, it's not C.
So forfeited if there are any sales to.
Yeah, there's no such thing as forfeiting it. I mean, that's it's nonsensical. The answer here is A, right? We can use an online questionnaire.
For all that.
Yeah, well, that's okay. So the exemption is, but now, do you have to register a private placement under Reg D with your state administrator?
No.
That's right. No, this is one of the few ones, right, that we don't have to register it under 33 because it's a safe harbor. It's an exempt transaction under 33. And under the Uniform Securities Act, it's a federally covered security, right? So we're not going to have to register this with anybody. Which of the following is not a leading economic indicator? So three of these things tell us where we're going in the business cycle. And one of these things tell us where we've been in the business cycle.
Leading,
So I always think of it as a locomotive. If I'm looking out on a train, I want to see where I'm going. I'm looking at the locomotive. If I'm in the train, I want to see where I'm at. I'm going to look out the side window. I want to see where I'm at. Caboose.
Next new housing. B.
What's that?
B.
B, new housing permits. Now that would be a leading economic indicator because new housing permits.
Oh, sorry. I was thinking, see again, I get.
Well, that's okay. So that is a leading economic indicator, something that's going to happen.
All of these.
So we're looking for something that is past tense, right? Future tense, leading, present tense, where we're at, past tense, where we've been.
So duration of unemployment.
There you go. I don't think I would memorize any of this. I don't think it's necessary. The one that shows up quite a bit on the test is leading economic indicators, stock prices.
Yeah.
That shows up quite a bit, and an inverted yield curve where short-term rates are higher than long-term rates, and that's a negative leading economic
I
indicator.
had that one both times.
There you go. There you go. So those are the ones that typically show up. And then remember where we're trying to figure out is very testable where we're at in the business cycle.
Mhm.
And where we're at in the business cycle, the two you get tested on there is the definition of a recession, 2 calendar quarters of declining GDP, and a depression, 6 calendar quarters of declining GDP. When an analyst adds back the current year's depreciation to the net income, she is computing. Ooh, you know. Listen, my friend Brian and I, Brian is a guy named the test geek, and we believe the 65, Jennifer, is one of the hardest tests. And when I'm doing shared screen files like this with you, Jennifer, and a question like this comes up, I go, all right, confirmation, the 65 is a bear.
Yes, it is. It's just,
This is a pretty high end. I'll be very impressed if you get it. Again, this is always the challenge on the 65. I'm not so sure how many rabbit holes we want to go down on like balance sheets. So for example, I get a lot of 65s where accountants, they go, man, Dean, I'm going to clean up on the balance sheet. I go, well, there's unfortunately for you, not enough of them. And unfortunate for us if we're not good on balance sheets and income statements, but let's see how you do on this one.
well, it's not C.
It is not C.
Mhm. Well, I think it's either B or D.
You are correct. You are correct.
So I guess investment going B.
You're going D or B?
D.
I'm sorry, D is in dog or B is in boy?
D is in dog.
Yeah, we missed it. So it's your cash flow. Let me explain to you. I don't think you missed it again. So, I could fake an income statement pretty easily that looks pretty good. And then put some footnotes about like revenue recognition. If you really want to know what's really going on, you say, hey, Dean, just show me a bank statement of the money that came into this business and the money that went out of this business. Cash flow. Depreciation is a non-cash expense. Here we go. For the assets we're using in the business, because at some point we have to replace those assets. We don't get to use assets for free. So as your accountant, I say, Jennifer, we're going to take a depreciation charge against your pickup in your trailer for your mowing service. It's a non-cash expense from your operations. Why are we doing that? I said, well, one thing, it's a non-cash expense. It will lower your reportable taxable income. Secondly, it reflects the fact that at some point you're going to have to buy a new pickup truck and a new trailer, right? Because you can't, use those for 50 years. So it's for things that have a useful life, assets that have a useful life. What we mean is assets that need to be replaced. So it wouldn't apply to like gold or oil because that's not an asset that we're going to replace, right? So cash flow from operations. That was a tough one. Wouldn't beat yourself up on that one at all. The Conference Board, a non-governmental nonprofit organization, regularly publishes a list of economic indicators. Which of the following would be included in their list of leading indicators? So they're asking what of these would be where the economy is heading. So remember, think about future
So
tense.
I know the leading indicator, I believe, has manufacturing. It's manufacturing.
So let's think about future tense, present tense, and past.
So claims of unemployment.
There you go. Initial claims is the key pivot. Initial, right? So this is what's happening, right now in the future. If the Smiths want to open a joint account at AAA Securities Corporation and have their securities transferred to their three daughters upon death of the last surviving account holder, the agent should recommend the Smiths open.
Is an option.
So the key transits into joint account. They want a joint account, him and her.
Is not an option.
What's that?
I said not A.
Not A. So transfer to their three daughters. So that means B is out, right? Because but that it doesn't transfer to anybody. It's the surviving party. Tenants in common is out, right? Because tenants in common, the fractional interest goes to the estate or beneficiary.
So I've never seen this D, joint tenants
Yeah,
account.
I'm with you. It's not common. It would be more common with an individual account.
Oh,
But
okay.
you could do that with a joint tenants, right? So you're right. That is a kind of a low probability one.
Yeah.
Some investment advisors offer technical analysis as a tool in managing personal investments accounts. When advertising these systems, it's imperative that the investment advisor promoting the program
B as in bull.
right on. Under which of the following circumstances would a premature distribution from a traditional IRA be exempt from a premature distribution penalty?
So I know the quadro.
Yeah, that's right. B would be a quadro. So B is out. You're absolutely right. That quadro is very testable, and you're correct.
Well, distribution taken at 55 would be a penalty.
Yeah, you can't do that, right? Because you got to wait till you're 59 and a half. So C is out. So B is out. C is out.
Never had this move.
Yeah, it's okay. It's one of those low probability ones, right? The exception would be is if you kind of say, I want to take it over equal amounts over my life with the actuarial table. So it's A.
So when the distribution,
Yeah, so that would be where you say, I want to take, it's one of those exceptions to it. But you were good on the 50-50.
yeah,
And D is, makes no sense because you
and
don't,
that's why I was like, it just doesn't make sense.
yeah, D doesn't make sense because you don't fund that
Yeah.
with a, with a with fully funded, right? So, which of the following actions taken by an agent is not prohibited? Not prohibited.
Well, you can borrow money from a bank that is in the business.
Right on, a bona fide lending institution. You're correct. Right? Bona fide lending institutions. Selling speculative issues to retired couple. Come on. Right? Failing to follow your customer's instructions. That's always a test question. By the way, they also give you one where if there was ever a reason not to follow your customer instructions, this would be it, right? Like I say, Jennifer, you'll thank me later, but I ain't gonna do it. Right? No. I say, Jennifer, I don't think it's a good idea, but hey, you're the customer, and if you tell me to do it, I'm gonna do it. I'll tell you what, though, I'm gonna document that this is unsolicited and that I told you that you shouldn't do it. Backdating conference. Oh, no, 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 no. Oh, no. If a customer owns 7% of a publicly traded company, this is very testable. We always consider on the test that husbands and wives are acting in concert.
Over 10%.
Right. Yeah, that's exactly right. So we're going to take the 7 and the 6. That means they got 13. That means they're a principal stockholder. And that means 144 does apply. So we need does apply. Let's see. So we know it's either B or D. So now we got to decide, is she an affiliate or is she an insider? Let's see. The customer, his spouse. So it's the wife. and the wife is going to be an affiliate. The affiliate are the family members. The husband here is the insider or control person, sometimes is the way we say that. So that I don't wouldn't worry too much about the phraseology, but I would know that husbands and wives are always considered to be acting in concert. I mean, I always joke, what's the point of getting married if you're not going to act in concert, right? Not every conspiracy is is illegal. The value of a variable annuity during the accumulation period is determined by. So I don't know if it's helpful, but every time I hear variable annuity, I like to say mutual fund with insurance wrapper. Mutual fund with insurance wrapper.
The number of accumulation, I would say B.
D,
B is in boy.
you're correct. Right, to say you have 6,000 accumulation units in a separate account, intellectually, Jennifer, is no different than saying you have 6,000 shares in a mutual fund. So I think of a variable annuity as a mutual fund with an insurance wrapper. I think of the separate account as a mutual fund. I think of accumulation units as the NAV or the shares that are in that separate account. Right. So, it's helpful. What is the term given to an item typically found at the bottom of the corporation's balance sheet? Oh, so on the bottom that describes such things as significant accounting policies, commitments made by the company, and potential liabilities and potential losses. These are always fascinating reading.
Well, I get a question all the time about footnotes being,
Yeah, that's where you want to read those footnotes, right? Absolutely. I say, well, geez, Jennifer, I read that. I was doing some fundamental analysis on that. Where the hell did you find that? I didn't see that anywhere. You go, Dean, you got to check out the footnotes. The footnotes is where all the stuff they don't want you to know. I'm teasing, but right, that's where they bury the stuff. Like, what are our assumptions, like our depreciation assumptions, or or litigation, or whatever it happens to be. An investment advisor with 20 million under management exercised discretion over client portfolios. If the firm's accounting manager were to discover the firm's net worth was only 8,500, what would the Uniform Securities Act require the firm to do?
but you have to send the notice to administration. Okay, following, yes. 3. 3 and 4.
Excellent. Excellent. That's exactly right. One of your customers asked you to interpret her observation that the short interest in the stock she owns has been rapidly increasing over the past 4 months. So I say, Jennifer, what that means is there are a lot of people that are borrowing that stock and selling it. They're selling the stock that they don't own. And you said, well, gee, I own it. I said, you do own it. And, these people are borrowing it. They're probably, I don't know if you signed the loan consent form, but maybe we should check and see if you have. Aligning with a short industry, you would tell her, now this is counterintuitive. A lot of people get hung up on this. You say, well, Dean, you seem like not to be bothered at all. I say, no, Jennifer, I'm not bothered at all, because remember, all those short sellers represent future buyers. And so we know that we have all these buyers out there because they're going to have to buy the stock to cover their short stock position. So counterintuitive, you say they're bearish. I go, they are bearish. But short interest theory says that short interest is bullish because it represents all those future buyers out there. What we're going to do, Jennifer, is we're going to squeeze the shorts. You go, gee, Steve, that sounds nasty. I go, well, no. Squeezing shorts means when the stock goes up, those short sellers are going to have to cover. Can you imagine anybody who was foolish enough to short NVIDIA? Oh my God. Right? They're getting crunched. By the way, when they get crunched, they have to buy to cover, causing NVIDIA to go further up. And so I say, don't be a dumb bear, buy a put, don't short the stock. So that's a tough one. A lot of people struggle with that one.
Never
You
seen,
are held accountable though for short interest theory. You are.
I've never heard for interest theory as a term.
Yeah. Oh, there you go. Well, now that's why we're doing it. So we're gonna learn while we're at. Well, that's part of doing the shared screen finals. Also, to find some things that we can talk about, know that are on there. You also are held accountable for the odd lot theory.
Yes.
Have you ever heard that one before? Yeah, the odd lotters are the dumb money, and we should do the opposite, right? We have Dow theory, which is technical analysis, saying that the trends, the indexes should confirm whatever movement that we're looking for, either a bullish trend or a bearish trend. A client's investment objective is safety of principal and income. And the client places an order with his agent to buy a speculative investment. The agent strongly encourages the customer to reconsider because she believes that the transaction is unsuitable. If the customer insists that the trade proceed, the agent should.
Well, you said it earlier.
Yeah, we got to do what the customer wants us to do, right? So which choice are you picking based on that?
Well, we're gonna complete the trade.
Yep, that's what we're going to do. Right? Don't overthink it. We're going to complete the trade. You should have been able to toss out C.
Yeah.
Yeah, no, we're not going to make you sign it. Then, by the way, if we make them do that and it goes down from here, or goes up from here, the guy's going to be pissed. He's going to say, "What the hell? I told you to buy it. You didn't do it right." So, one of your clients will be separating from his current employer and ask you for suggestions what should be done with the assets of the 401k. Roll them over to me.
Yeah.
Okay. The plan documents indicate the plan's asset must be distributed upon termination. Given the following choices, your recommendation would be.
We definitely gonna roll it over. What does D say? No, we wanna direct rollover, just how fast?
Right on. That's exactly what we're going to do, right? If an agent receives a written customer complaint from his stepmother, I love they're trying to glad your mind. It doesn't matter if you're your stepmother. I mean, it's embarrassing, but hey, a complaint's a complaint. Regarding the handling of her account, under current regulations, the agent.
It will B and D are out.
Yeah.
C's out, so A.
Good job. Excellent. I love how you attacked that one. Process of elimination. Which of the following statements are true of a discretionary order at a broker dealer's? The broker dealer side is a little different than the investment advisory side.
Difference between the broker dealer. I don't think it has to be put by the SEC. It has to be approved.
That's true.
It's gotta be one, so
That's right.
A and C are out.
That's right.
It's either 2 or 3. Well, it's definitely gotta be reviewed frequently.
Right on. There you go. Excellent. Love the way you attacked that one. Gross domestic product is increasing. Real interest rates are relatively high. Consumer sentiment is strong, as are auto and retail sales. Labor productivity is declining. What state of the business cycle is the economy likely experiencing? So gross domestic product is increasing. So that means where economy is expanding. Real interest rates are high. So that means the demand for money is high. because we can charge higher interest rates, so the demand for money is high. Consumer sentiment is strong. Everything looks great here. Auto and retail sales are strong. Labor productivity is declining. So we only have one bad thing here. What business cycle? So I would have done process of elimination here.
Well, expansion to peak.
There you go. That's exactly right, right? You're going from
Yeah.
boom, right? We're gonna be,
Yeah, it can't go much higher.
yeah, we're like, okay. Esther Watson has recently been hired by Robinson, Ibbotson, Carlson, and Hanson, an investment advisor registered with the SEC. That's important. Rich has offices in 17 states, and Esther works in branch located in state A. If no exemptions is available, Esther will have to register as an IRR with, this is very testable.
That's true. So works for a federally covered.
That's key to this question.
He has offices. Understand why if no exemption is available.
What that means in English is, state administrator says you don't have to do it.
So must register in A.
Yeah, that's it. End of story. I mean, all that rest of that stuff is just a Jedi mind trick. Once you see keyword investment with the SEC, then all she needs to register with is states in which he has place business, period, full stop. So it doesn't matter that Rich has 17 offices. That's just there as filler, right? So really key when you read questions to determine whether it's federally covered or state covered, because that's the pivot, right? That's the pivot. A broker dealer operates on a fully disclosed basis is one that
I feel like it's introduces its customers to the
that's
broker.
what it is. Exactly right. I say, Jennifer, I'm going to introduce you to my clearing firm, which is Pershing or National Financial, and they're going to hold your monies in securities, and then I'm going to execute trades through them. That's our clearing firm. On your statement, it says Gama Global Investments has introduced to National Financial. Good job. Strategic Capital Asset Manager, SCAM, is an investment advisor registered in 5 states. So that means they're not federally covered. In lieu of preparing a fancy brochure, SCAM is permitted to provide clients with a copy of its
B.
D
So
as in dog.
I always remember it's not to be, because B is about me.
Well, yeah, but remember you're opening a client in lieu of prepare SCAM a copy of. So you are correct. It's not A, it's not B, it's not C. And so you're going to give them part 2, which is your point. They'll talk about the firm, scam, and then 2B will be about scams people. You, right? So it's D, right? Boom. 2A, you're absolutely correct, Jennifer, is about the firm. And 2B is about the people. The people. By the way, you should know that's not, you should B is a bad miss.
Yeah.
A is a bad miss. C, not such a bad miss, but still a miss. Here we go. Which of the following forms of the efficient market hypothesis claims that technical analysis works?
So the weak form mixed up. One says it does, and the other one says it doesn't. Okay, so,
Well, remember, there's three forms.
right.
Weak, weak form says technical analysis doesn't work. Semi-strong says material non-public information works, but not technical analysis. Strong form says nothing works.
Nothing works. Then semi-strong. But semi-strong says neither works, but you're saying strong says neither works.
Strong, nothing works. Random walk down Wall Street.
Yeah, well then, I guess semi-strong.
Well, no, it's actually none of these. Technical analysis doesn't work under weak form. It doesn't work under semi-strong form because now what does work is material non-public information. But technical analysis doesn't all start working as we move up that chain. Every level includes the previous level.
How
So
many of these do you think I'm
you're
really
going to get two. You're going to get one or two.
one or two? Okay.
And I told you what the test question is already. Weak form, technical analysis doesn't work. Strong form, nothing works. Right? So, good news, you're going to stay out of that middle ground there with you. Right? For the answer to this one is none of these work. There's no efficient market hypothesis that stipulates that technical analysis works. A member of the investment banking department of ABC Securities is explaining some of the advantages and disadvantages of rights and warrants to the board of directors of XYZ Corporation. Which of the following statements could he make?
Ooh, right. Number one, exercise. Number one. Oh, stock rights. I'm gonna go with, I guess. Are warrants attached to bonds?
They're used as sweetener.
Yeah. Okay, so that's true.
That's right. That's the way you go about it. You just read each
There you
statement.
go. C.
That's indeed. All of those are true. Good job. Under the concept of inertial inflation, this is another one where I go, come on.
What's a
This
nerd?
is hard enough already. Welcome to our Fed, right?
I'm gonna go with C.
Core inflation is a better measure of actual inflation. No, it's actually, that's why I brought up the Fed that, when the inflation's almost 9%, the Fed says we got to, we don't do anything. It's just on its own, like a balloon going to fly away. We're going to have to do a massive intervention. We're going to be raising interest rates, 1%, 2%, 3%. We got to deliver an economic shock to get that inflation to stop kind of rising and start coming back down. So it's actually A. I wouldn't worry about that at all on your exam. That's a very high-end economic concept, so I wouldn't worry about it. A man is planning to start his own glass sculpturing business. He wants to be able to deduct his anticipated losses. So he wants his losses to flow through. He anticipates that the enterprise will borrow money from lenders, and he's willing to personally guarantee that debt. Doesn't sound like it's starting to not sound like a sole proprietorship. He also wants to attract other investors, but he doesn't want to give up control of the day-to-day business decisions. What form of business do you recommend? I don't like this question because we're not supposed to be giving legal advice, but they are trying to get at the different forms
So
of business.
small, but it needs to be large. It'd be a general partnership.
Yeah, I like that one, but remember it says he's going to have some other investors there. And so if he's going to have other investors, you're right, it's a partnership. But remember, there would be limited partners, right? Because he said he doesn't want to give up the day-to-day business decisions. And he has two general partners. Now, the other one they have on the test is a husband and wife who have a general partnership family business. And they ask you on the test, why would the husband and wife want to dissolve that partnership and reorganize as an LLC?
The
Liability, right? Because LLCs don't have that unlimited liability. The S2U Corporation has issued common stock, preferred stock, promissory notes, and mortgage bonds. Should STU enter bankruptcy proceedings, the order of payment against claims would be the order of payment. So now we're asking very testable the liquidation priority. Who gets paid first in bankruptcy? Who gets paid last?
common stock is paid last.
That's how I would attack. Common stocks last. So that means it's C or D.
For D. Okay, then preferred. So promissory notes. Yes, I would go with, is mortgage bond considered
Mortgage bonds are senior bankruptcy.
secured debt?
That's right. Secured debt. That's what that is.
Then I would say D.
You are correct. That's very testable to know senior to junior or junior to senior, right? Senior to junior.
Promissory notes are just considered short term.
Short, it doesn't matter. Promissory notes. So notes is debt.
Yeah, so but
Yeah, they are. So they can be short term. They can also be long term, but usually for short term. All the following must be specified in a security state registration, except. So what do we not need to tell the state administrator about the security we are offering to investors, retail investors in their state?
Well, C sounds weird. Expected to be some.
Yeah, I'm sure by the way, this it serves as the basis for what you're going to tell the investor. So anything you're going to tell the investor, you're going to tell the administrator, and you're certainly going to tell the investor what you plan on doing with the proceeds. So the projected use of the proceeds is definitely going to be something that would be found in the registration statement.
Well, they'll tell them the amount.
We definitely are going to tell them how much money we're going to raise in their state.
Stock order from another state.
So does he want to know if you're in trouble in some other state?
For sure.
There you go. So by process of elimination,
E.
yeah, he doesn't care about what you're doing in other states in terms of offering. He wants to know what you're doing in his or her state, right? His or her state. An investment advisor representative, oh my God, is looking for a suitable investment with an attractive return commensurate with its systematic risk. The choices have been narrowed to security C and security L. The selection will be based on alpha. So alpha is the excess return. C has a beta 1. So now that's important for us because that means that represents the market return, right? If I tell you the stock has a beta 1, that means we can substitute that as being the market, right? Because whatever the market does, that's what it should do. And then alpha would be the excess return over that, right? Okay, so C has a beta 1 and earned 13%, which equaled its expected return. While L has a beta of 0.8. So now let's talk about L. L is 80% as volatile as the market. So we would expect it to go up the same as the market because it's less volatile and that means less risk. So when the market goes up, it's going to underperform as it did here.
Alpha of security L. Okay, so it would go up 0.8%.
Of the, yeah, it should that, well, that would be our expectation, right?
Okay.
And if it goes down, it's going to go down eight or eight 80% of one. So it's going to go down not as bad. So in an up market, it will underperform in an up market like it did here. In a down market, it'll outperform because it won't go down as much. So now we got to decide, does security L still have excess return over beta with a beta point A and a 10.1% return? So how would we go about doing this? You have any idea about what you would do here?
So is this the expected return?
Yeah, what I think I would do, let's see, what you want to do is kind of look at it and just kind of say, okay, well, how am I going to proceed here? Now, by the way, we'll see what your score is, but some of this you might want to assign it to the universe. I think what I would do is say, okay, well, 13% is the market return. And this has a beta of 80%.
The, the formula is like market return minus.
Well, yeah, but we don't have the risk-free rate of return. We don't have a lot of stuff here. So what we're going to have to do here is a more simplified version of that, right? Does that make sense what I'm doing here? I'm taking the market return and I'm timesing it by the beta, right? And when I do that, when I take 13% times, I get 10.4. Right? And we got 10.1. I like to put that either above or below that number just to. So it looks like we're not going to be happy.
So the negative 0.3.
There you go. Right. So that was our actual return, right? So boom, the answer is indeed B. You can have positive alpha and you can have negative alpha. Right. Now, by the way, if we get one, I told you these you got to decide. This one, before I freak out on math, I had a guy 65 and we show up on the Zoom screen, says, Dean, I'm not paying you $225 an hour to do math with me. I'm a math geek. I can do math. I don't need help on math. And I don't even memorize formulas. Any two numbers I can solve for the third. And, I said, fine, and then he passed, but he said, Dean, I wish I would have paid a little more attention about inputs and outputs because they did ask me to like recognize like formulas and inputs and outputs. And as I told you, I didn't memorize formulas. I had to reverse to kind of engineer that. My point is on most of the time, if it's math, there's a couple things to do. One is look at it and say, okay, I'm either going to come up with a hack here on how I'm going to proceed. And if I can't come up with that, I'm simply going to guess B, assign it to the universe. I'm going to move on. I'm going to make it up elsewhere. Now, on these high-end concepts like CAPM and discounted cash flows, and the most of the math is going to be stuff like total return, current yield, balance sheet stuff. So you're not going to get too much of this alpha and beta. Definitionally, certainly, you need to know beta is a measurement of volatility as compared to the market. You need to know alpha is X risk return over beta. So definitionally, yes. Practical application, and maybe.
What, I don't know if this is time to ask, but what do you suggest the tactical approach to, let's say, something that I'm not necessarily sure I'm going to get right?
Well, that's why we want to do some practice exams and keep getting scores, right? I would like you to be in what I call a margin of safety in that mid 70 range consistently on a practice test, because that's the range where you can like decide. Now, this one, I said I wouldn't feel bad if you decide to assign this to the universe. However, before you do, just really kind of, take a good look at it and say, okay, do I have an idea of how I'm going to proceed? Right. And if I don't have an idea about how I'm going to proceed, here's my recommendation. I don't think, Jennifer, it's worth burning up brain cells you're going to need later on to
Yeah.
be looking at something that, you're not going to be able to get it. So, and I'm also not a believer, and this is different. You got to do what you're comfortable. It's a buffet. Take what you like, leave what you don't. If I do assign this universe, I'm not coming back to it. I'm not going to say just because I'm assigned the universe, I'm going to put in that basket of things I want to come back to, because that's going to distract you as you move forward. So once I've made the decision, I'm assigning that to the universe. I'm moving on. That's a done deal. I ain't going back, right? Because that can get you wobbly towards the end. You can get tired towards the end.
That's what happened to me
When you
last.
get tired, then you're starting to overthink things, and you go back and look, and so I'm not a big fan of that. I believe in matriculating down the field into scoring position. We deal with question 42 once, done. We assign it to the universe, and
Want
now,
to flag anything.
yeah, that's right.
Got it. Okay. That would be a whole different approach, but I like getting
Yeah.
new ideas.
Yeah. The process of making changes to an asset allocation model over time in an effort to adapt to any allocation percentages that are no longer in tandem with the original allocation model is called
Percentages. Okay, so that are no longer. So rebalancing is the percentages of.
that's it. Yeah, that's what it's called. All right, boom. That's still, by the way, considered strategic asset management. Right. So that's not active management. We're simply trying to rebalance our asset allocation model. Under the Investment Company Act of 1940, which of the following statements is true about a mutual fund that wishes to contract with an outside investment advisor to manage its portfolio? We call these sub-advisors.
Must provide for them. Would definitely think it has to be in writing.
Right on, boom. Right. They ask you if something should be in written form on this test, you should say yes. Right. The portfolio of a client of an investment advisor began the year with a market value of 1.2. 60% of the portfolio was in equities, 30% was in bonds, and the remainder was in cash. It was a good year for equities, and at the end of the year, the total value of the account was 1.5 million. This resulted in the portfolio manager liquidating approximately $100,000 of stock and placing the money into bonds. Given this information, it's most likely the investment style is.
Sounds like the same.
Yeah, it sounds like, again, what we're doing is rebalancing, right? But I just want to check that. And here's
Oh,
how
you
I'm going to check
said
that.
strategic is also.
Well, yeah, well, let's see why we're doing it. Here's what I'm going to do now. I'm going to say, okay,
What the amount.
said that 60% was in equities.
Mhm.
So now I'm going, it says I got 1.5 million, and now I have 1.4 million. Well, let's see the result. I liquidated 100,000 of stock. So 60% was in stock. So 1.5 million. I'm going to times that by 60%. Right. What I'm trying to figure out here is what are trying to do? Is it strategic or is it rebalancing? And by the way, it's not tactical, right? Do we agree it's not tactical?
Oh, yeah.
It's not contrarian. So we just got to decide it's rebalancing or strategic. And let's see. So I'm just seeing that the asset allocation model has changed. So we took 100,000 out of stock and we put it into the bonds. And so I think I'll do the 1.5 times 30%. And that would be 450,000 in bonds. And so I had 1.2, and it looks like I have changed that percentage. So I'm not rebalancing it. It looks like I'm actually changing my asset allocation model. So if I'm not putting the same percentages back in, then it's not rebalancing. Rebalancing would be I'm selling the stock and I'm putting it back to 60-30. And here, that's not what I did. I actually have more money now into bonds. So that's why it's strategic. It's strategic because I'm actually not following that same balance there, right?
Percentage.
Yeah. So that's why that was strategic. An investment company that invests in common stock, preferred stocks, and bonds. I call this truth in labeling. So whatever you call the fund, that's what you got to do, right? So it's certainly not a growth fund. It's certainly not a sector fund. So you have to decide, is it a balanced fund or is it a income fund?
Well, let's stop. Absolutely. Yes. Balance because it
Yeah, that's right. Balance between stocks and bonds. Indeed.
they
Indeed.
have common stock in income funds, do they?
Income fund would typically be a fund that has common stocks that pay dividends. Right. Mary Beth Williamson is the CEO of MBW Software Associates. MBW is offering common stock to investors on an intra-state basis. Key thing, we're staying within the state. Williamson has been telling potential investors that the registration of the stock indicates approval by the state. Under Uniform Securities Act, she's committing misrepresentation of. So what is she misrepresenting?
Registration.
Yeah, I mean, she's misrepresenting the registration. Every registration statement says every of them, ever on the front page in all caps. The SEC or state administrator neither approves nor disapproves of any securities offering. They neither pass upon the adequacy or the accuracy of the information contained herein. And I love the last line. Any claim to the contrary. So Mary Beth should be careful here. Any claim to the contrary is a criminal offense. Are we clear what that means, Mary Beth? What might happen to Mary Beth if we tell her this is a criminal offense? She might end up in.
Criminal court.
That's right, state prison, not a federal prison, because that wouldn't be 33. Federal prison is 33. If it's intrastate, it's going to be whatever state she's, from. When viewing a corporation's financial statements, shareholders' equity is computed by.
Um, he's out. Um,
I kind of like it because this is getting at the classical balance sheet equation.
correcting
The classical balance sheet equation is.
total liabilities and total current liabilities and current assets.
Yeah, the classical balance sheet equation is
It's just, well, I always just say assets and liabilities. So
assets minus liabilities
the
equals net
total, okay,
worth,
yeah.
right? Shareholder equity. Do you know what D would have been the right answer to? That's testable. You know what D is the right answer to?
I should know that.
That's working capital.
Working capital. Yes.
Working capital. That's very testable. Do you know what B is?
Okay. Yeah. NAV multiplying
That's
current
market value.
market.
Market value. Right? We have market value, par value, and book value. That's market value. The current market price of NVIDIA times the number of shares outstanding is $3 trillion, Jennifer. Wow. A mega cap, right? Crazy, crazy. And A is just the wrong answer. Right? There's nothing that is A. That's just wrong. By the way, this is test on two levels, right?
Yeah.
I say, Jennifer, for me to do a really good job for you over time, I need a lot about you. And one thing that might be helpful is to do a little data gathering here. Why don't we do a personal balance sheet as of today, just to see where you're at? Let's go over your current assets, cash and things you plan to turn to cash within the next 12 months. Let's go over your long-term assets, your house, your retirement plan. Let's go over your short-term current liabilities, things that need to be paid within the next 12 months. Let's go over your long-term liabilities, your mortgage, your car loan. Let's establish your net worth. And then let's revisit this and see how we're doing on our financial journey together. Now, Jennifer, one thing we might want to consider is liquidity. How much liquidity do you need? So I know I like to be very liquid personally. Everybody's a little different about your risk tolerance, but how much working capital you want laying around, right? So we do it on both. Let's go over an income statement. Let's see how much money you got coming in, Jennifer. Your top line income. Let's see how much money you got going out. Let's see if we have some money at the bottom. See, we have a positive number on your bottom line. If looking for ways to redeploy some capital, perhaps dollar cost averaging. So this is test on two levels. Second point, they're going to ask you on the test about non-financial considerations.
Yes.
And non-financial considerations are important, but it wouldn't be on your balance sheet. Like your age, that's important, but it's not on a balance sheet or income statement. That's non-financial. Your marital status, that's important, but it's not there. Kids, not there. Right. So non-financial considerations are things that don't get expressed as a number on financial statements. Right. So risk tolerance, hugely important, doesn't show up on a financial statement, right? Which of the following are advantages of an irrevocable insurance trust? Irrevocable insurance trust.
Well, irrevocable, once set up, no changes may be made.
Can't change your mind. Can't change your mind. That's right. So remember, you just said that. So three's out.
Yeah. So it's gotta be two and four.
Well, it's actually one and two, right? It's one and two, which of the following are advantages?
Oh, I didn't read that. I didn't.
Advantages, right? So one and two is an advantage, right? You can't alter it, right? One setup, no changes may be. That's not an advantage. That's a disadvantage, right? The kids let you down, is what it is. Which of the following regarding an agent's registration is most accurate? Most accurate.
That's not true. Agent. Broker with and other. Well, C's out
That's correct.
and A's out.
That's correct.
Cancellation of effective registration versus active. I think it's B.
Do you think it's C?
D.
I'm sorry, D?
B is in boy.
D is in dog?
B is in boy.
You are incorrect.
Okay.
It is D as in dog. If a broker dealer with which an agent's register has his registration revoked. No. There's no such thing. If there's no such thing as you have a registration, your broker dealer doesn't. So you got no broker dealer, you got no registration.
All right.
So the answer is actually
Oh,
D.
that's true. I forgot. The minister does not hold.
Yeah.
Yeah.
Right?
I'm sure that was
He doesn't say, hey, Jennifer, I'll hold it here for you.
Yeah.
No.
I just reread that part. I would have got that.
A client is meeting with you to discuss the best way to invest today to meet the goal of funding the child's college expenses. The least important information to determine the amount to deposit is.
We least important need to figure it out.
Yeah, I think this is kind of an interesting way to ask this question.
Well, we definitely know current college. Well, that's current
Yeah,
college.
yeah, that's gonna be important, right? That's the future value, right? We definitely need that.
Well, I guess the parent salary
Yeah,
because
I don't like it, but I kind of like what they're getting at, right? We need to know the kid's age. I mean, by process of elimination. Which of the following is not a component? Oh, I like this one. Of the discounted cash flow method of determining the value of a fixed income security. You know, the reason I like it is because it's kind of like what we were talking about. You know, nobody's going to make you do this math because they're giving you a simple function calculator. But they do, I like to ask you, what are the inputs and outputs of doing discounted cash flow?
well, we need discount rate.
We certainly do.
You know, the maturity date.
We certainly do.
I don't know why we need securities rating.
Yeah, it has nothing to do with it.
Yeah.
I mean, that's important, but not part of DCF, right? Now, remember, when we do DCF, what we're trying to come up with is the present value of those future income streams, right? And when we do that math and we come up with present value, if that's the price of the bond, wow, what a coincidence. The price in the secondary market of the bond is the exact same price as the present value of the discounted cash flow. That means a pretty efficient market, I guess, fair value. I mean, you know. Now, if we do the DCF and we come up with a positive net present value, what that means is the future income streams, payments, are worth more than the present value of the bond in the secondary market. That's positive net present value. And that means we got a deal, right? We're using it for valuation. Now, if there's positive net present value, we go, okay, we feel pretty good. We're getting a good value. And if we do that calculation and we come up with present value and it's a negative net present value, we say, ugh, I don't want that. That one's overvalued, right? You know, and a lot of investors who believe in DCF will sit on that bond's price until they get the price that they can get it at, either that approximates present value or gives them positive net present value. Now, we can also do that. That's a valuation method for fixed income securities, but you can also apply it to stocks, right? And in stocks, it would be not the securities coupon, but the dividend. And we'd be doing the same thing, right? We would figure out what is the present value of these future dividends. What is that called?
A dividend discount model.
Excellent. Now, further, again, valuation. We're going to get the present value and then look at the price of the stock and decide whether that's a good value or not. These are called valuations. Now, PE ratios are valuations. How do we value stocks? Fundamental analysis, valuation. So that's what we're doing. The other assumption we could make is that the dividend might be go up. Right. In other words, if the company is paying an 18-cent dividend, maybe they'll bump it to 21 and maybe bump it to 24. And if we assume that test question, that would give us a higher valuation. We'd be willing to pay more. We'd have a higher present value if we're assuming the dividends are going to rise. And that's called?
I don't know.
I like it though. I like listening to it. I like it. It looked like you were accessing your cloud and seeing if it was
Right
there.
away. So
That's
instead of
called the,
thinking
that's
about
called the
it,
dividend growth model.
bro, yes.
Yeah, yeah. Remember, I'm going to play this game by reaching into the cloud, and on the test, remember, there'll be an answer set in front of you. So you'll be in a little better shape, right? So dividend growth model. All right. So you can apply the dividend growth model to preferred stock because the dividend isn't moving, right? So
I haven't had a lot of questions about that.
oh, good. Well, good. Well, good or bad, I guess. I mean, it's there, but
Oh, it's good you're bringing it up.
yeah, a major risk for highly rated corporate bonds. So there's only two U.S. corporations, Jennifer, that have AAA credit: Microsoft and Johnson and Johnson. So if you buy a Microsoft corporate bond, what is the most likely way you're going to lose money in a Microsoft debenture?
Well, obviously liquidity is not a problem.
Yeah, no, it's not.
And,
So the two risks in bonds are credit risk and interest rate risk.
right,
And so if you're buying a Microsoft debenture with a AAA credit quality, how likely is it that Microsoft defaults on their bonds?
not like,
Not likely. So you say, Dean, I lost money on my Microsoft bond. I go, really, Jennifer? How the hell did you do that? He said, well, Dean, I bought it. And then after I bought it, interest rates went
oh, if,
up,
well,
causing my
yeah,
Microsoft
yeah,
debenture to go
down,
down. And then I sold it, right? So it is interest rate changes, right? The two risk in bonds is credit risk and interest rate risk. Do you have credit risk in treasury bonds? No.
say that again?
Do you have credit risk in treasury bonds? No. Do you have interest rate risk in treasury bonds?
Yes,
Absolutely. As an incentive to encourage clients to invest in a particular stock recommended by the broker dealer, the clients are told that anytime within 6 months after the purchase date, they may sell the stock back to the firm at the original cost plus the state's legal rate. This would be,
well, they can't do that.
yeah, we're not supposed to hold people harmless, right? They're supposed to understand that this is their risk capital, the kind of capital that, they can lose. So
So they can't do that. Prohibited, guaranteed against loss. It's not, um, I guess A, prohibited against guaranteeing,
yeah, that's exactly right, right? If the value of the US dollar increases against other currencies. So I think about this as just me as a consumer.
it's always so hard for me. I don't know.
Okay, so let's think about Dean as a consumer and my US dollar goes up against the peso. That means I can buy more tequila,
Right,
right? And tequila is an import, right? So US exports are more competitive, US imports are less competitive. Foreign imports to the United States are more competitive. I just gave you an example, right? It used to be 10 pesos to get a dollar. Now it's 20 pesos to get a dollar. So that means my dollar used to get me 10 pesos. Now it gets me 20. That means my tequila went from $60 a bottle to $30 a bottle.
okay, so the imports
That's
are
right. So imports are going to become more competitive.
more competitive.
Okay, so now let's talk about exports. My Caterpillar friends, I was tutoring somebody the other day, Jennifer, who told me her friend is the CEO of Caterpillar. I said, really? And I said, what a challenging business, particularly in Mexico. They're doing a lot of infrastructure projects, trains and airports and refineries, and they are using excavators and bulldozers. That's kind of Caterpillar's thing. But Caterpillar is selling those bulldozers for pesos. And it used to take 10 pesos to get a buck, but now it takes 20 pesos to get a buck. So if Caterpillar wants the same amount of money coming back to the US, they're going to have to double the price of the bulldozer in Mexico, causing the
Less competitive.
bulldozer to not be as competitive. So US exports are going to be less competitive, right? Because we're going to have to charge the foreign countries more money. So the answer is going to be US exports are less competitive and foreign imports are more competitive. Now, remember, that leads to what we call a balance of trade.
Right.
We also need to know how this is going to affect the balance of trade. And we just hinted that Dean's going to buy more tequila, and that's going to be a debit, or excuse me, a debit to the balance of trade, right? Because the Mexicans give us the tequila and then I give them the money. And so that would be cause a trade deficit. The trade really, the test really oversimplifies things, but oh well, right?
Yeah.
And that
Like,
means
like,
that our exports are going to be less competitive. And so that means we're not bringing in as much.
Yeah.
This would lead to what we call a trade deficit. All right, let's do the opposite. So the answer to this question is 2 and 3. We clear out it's 2 and 3?
Yes.
Okay, so now we say the peso goes back to 10 pesos to $1. So now the US dollar has decreased in value. It used to buy me 20 pesos, now it only buys me 10. So now if my Mexican friends want the same amount for the tequila, they're going to have to double their price. Because they're going to need to double the price to get 20 pesos. Used to be $1 gets them 20 pesos. Now it takes $2 to get 20 pesos. And so that means my tequila is going to go from $30 a bottle to $60 a bottle. And that means if the dollar is weak, foreign imports are going to be less competitive. Right? And now Caterpillar can say, okay, we don't need as many pesos. We need half as many pesos to buy our dollars. And so now Caterpillar is going to be a more competitive position. So if this said dollar decreases, it would be 1 and 4. 1 and 4, and that would lead to a trade surplus. Right? Now, one other thing. Countries have checking accounts called the current account, and this can be affected by interest rates. Because when US interest rates go up, the dollar gets stronger. Right? So the Fed has been raising interest rates, and when you can get 5% in the US Treasury bond, a lot of foreigners started buying Treasury securities. Right? 5% with no risk. So all this money floods into the US, and the US dollar goes up. And so that again has a consequence on the balance of trade. We said when the dollar goes up, it leads to a trade deficit, right? Because the dollar's stronger, that means the foreign currency is weaker. So you got to tie that to interest rates as well. Interest rates go down, the dollar's less attractive, right? And I'm not being facetious, by the way. The dollar is not a foreign currency, right? So whenever you get these questions about the dollar going up or down, it's meaningless unless we kind of say in relationship to
Right.
the won or the yen or the peso or whatever the case may be. A business organized in which the following, as which of the following pays federal income tax on its income?
Yes.
Pays federal income tax on its income.
So, sole proprietorship.
Well, the sole proprietorship is going to have the flow through. This one's a tough one. Yeah, you're right. The sole proprietorship flows through, and you're going to pay income on that. So you nailed it. Good job. An investment of 5,000 was made 16 years ago and is now worth 20,000. Oh. By the way, I shouldn't have to told you the rule of 72. In other words, I can leave this camouflaged in this question, and you would be required to say, oh, I can use the rule of 72 here. Right? You said, I thought Dean told me I'm not going to have to do any present value, future value calculations. And I said, well, take a deep breath. So remember what 72 says?
You take half.
72 says we can divide 72 by the number of years, and it'll tell us the percent we need, or 72 by the percent, and it will tell us how many years. So we're going to take 72. We're going to divide by 16, and I get 4.5%. By the way, if I want to check it, I could take 72, divide by 4.5, and I get 16.
Yeah, sometimes you don't have to go up.
Listen, now we just want to get more comfortable with the foreign language. Right? So now let's start using some foreign language. 5,000 is the present value. 16 years is the number of compounding periods. And 4.5% is the internal rate of return. So if we were solving for future value, we didn't have the 20. We wouldn't make you come up with the 20. But if we were solving for it and we had 5,000 number of compounding periods and 4.5, we plugged that into a computer with a key that had an exponential number on it, it would come up with 20. Right? Because the 4.5 is the internal rate of return that takes 5,000 to, oh, my bad. Dean made a mistake here. I made a mistake. I'm just looking at it again. And we didn't go from 5 to 10 to 20. We went from 5 to 20. So now we have to double the money twice, right? I got to double it to 10. And then I got to double the 10 again. So I almost blew it. Because I thought they got me, by the way. What threw me for a jam here is they told me rule of 72. Had they not told me that, I wouldn't have fallen prey to this. But now I just was messing around. I find out, hey, Dean made a mistake here because we're going from 5,000 to 20,000. And so now I got to say, okay, well, if I'm going from 5,000 to 20,000, it would be again for me to recognize the symmetry and say, okay, and this is 16 years is our time frame.
Well,
Boom.
10, you
So
know,
what I'm going to do here is I'm going to say, okay, well, halfway through our financial journey would be if I could get to 10,000 in 8 years, that would be halfway through there. And then I could double again. So that would be 8 years and I could get to $10,000. So I use the wrong compounding number here, right? So now I need to know if I need to double my money from 5 to 10 and 8, I'm going to take 72, divide by 8, and I get 9%. And there we go. And now I got to do that again, right? So 9% to go from here to here. And then I'm going to have to double again. And so it's going to be 9 and then another 9%. Every once in a while, somebody will go, oh, it's 18%. I go, no, you could check that. If we take 72 by 18, that's not 16 years, right? So
right,
how we did that. So what we did here is we said, okay, I have to recognize the symmetry by saying, okay, can I use the rule of 72? Here they told me I could. They just stipulated to use the 72. But my point is I don't necessarily have to tell you that on the test. By the way, again, present value was 5. That's how Dean got himself, by the way, going through the thing. Present value is 5, future value is 20. If we took the future value of 20 and we had the number compounding period, 16, and we used 9%, we would come up with the present value of 5, right? And then again, the 9 is the internal rate of return. That's what takes 5 to 20 or 20 back to 5. All right. In general, a broker dealer is required to register with the SEC. An exception to that requirement would apply to a broker dealer. You know, I like doing these things because I go, come on, why are we asking you for this nitty pitty thing? The default should be broker dealers have to be registered. So here it says with the SEC, and that's different than the state. The state's pretty easy. If I have an office in a state or any retail client in the state, I have to register the broker dealer in the state. Period, full stop. Yeah, that's it. Pretty simple. Here they're saying, under what circumstances do I not have to register with the SEC?
yeah, this is a different kind of question.
Yeah, I'm with you. This one's just stupid. It's D, right? I don't know of any broker dealer who's not going to be doing things across state lines, but right, stupid. One of your clients purchases a European style put option on a stock. So you don't get many option questions, but you definitely get tests on the difference between American style and European style exercise. The premium is 3 and the exercise price is 35. If the price of the underlying asset is 40 on the exercise date, the client has
Paid,
so you bought the choice to sell the stock at 35. And at the price, the underlying asset on the exercise date, that, by the way, this should say expiration date, but the 40, is anybody going to, am I going to sell it at 35? If I could sell it in the open market at 40?
no, you're not.
Yeah, so that means my put contract is going to expire worthless.
Right. So lost 300.
Well, yep. But by the way, being a bear and losing $300 is a lot smarter than other stupid things I could have done, like short the stock or do a naked call. You know, if I buy a put and I'm wrong, I just lose my premium. The Uniform Securities Act would not consider whom of the following to be a securities professional. So which one of these people is a civilian? I know you're probably jealous because what that means is they're not going to have to take and pass an exam.
Not conservative. Um, the business of but D, but individual
There
investor.
you go. Yeah, that's right. Right. You know, broker dealers are persons that buy and sell securities for their own accounts, their inventory. Persons in the business of advising others are investment advisors. Persons in the business of buying and selling securities on behalf of others are broker dealers. That's a good job. Individuals who operate as an investment advisory firm as a sole proprietorship would not be able to include on their business cards or stationery the initials. I like this one. This is testable. This is called misuse of professional designations. Misuse of professional designations or designations that don't even exist to begin with.
Investment advisor.
Yeah, there's no such title as that. Under your card, you could spell registered investment advisor,
Right.
but you couldn't initial it. Now, those other ones you can use assuming you have them.
Yeah.
Under which of the following circumstances would it most likely be presumed that the advisor holds custody of client property?
Who's access, meaning like logins?
Let's see, which one are you looking at? Ellen engages Sam, a rep of a registered investment advisor, to prepare a financial plan. And in conjunction with the plan, Ellen provides Sam with access to all our brokerage account statements and tax returns. Nope.
Yeah, okay.
That means I just skip.
Fine.
And the custody means I can actually get your money and securities out of your account.
That's what it was like. Access, it made it.
Yeah, yeah, I'm with you.
Paul is a client of Gibraltar. Um, but that's fine, right? How the client makes a check. And so it can't hold the check if it's made out to him.
Yeah, there's a key word here.
Oh, he makes deposits. So if Harold's, he's automatically withdrawn from his.
There you go. That's the key, right?
Yeah.
Where he automatically can take money out of Jennifer's account. Woo!
There's a lot to read there
Yeah, right. So
just to get it out.
programs allowing for the direct pass-through of losses in income to investors include all the following except
Through an escort, yes. Then yes. losses. So REITs, I don't think you can have losses.
Perfect. That's right. They're stuck in there. That's right on. Stock market indexes have a variety of uses. Which of the following is least accurate regarding the use of stock market indexes? Least accurate. Oh, I kind of like this one now that I kind of look at the answer set.
Use of, okay, they do help portfolio.
That's right. I mean, that's very testable to know that they're benchmarks.
Balance. ETF can use them. Lagging indicator of that's a question. Stock market.
Now you're on the right track. Yeah, we talked about that earlier.
Yeah.
Did we say that stock prices are lagging indicators, or do we say stock prices are leading indicators?
Leading indicators.
So at least true is A, right?
Yep. That's why I was like,
Yeah, the grammar, but by the way, the guy who's in charge of this thing is a guy named Chuck. And he purposely tries to write, like the grammar, the bad grammar on the test. So I'm with you. Some of these questions like, oh, what? I know
oh,
how much you
goodness
love these.
gracious.
Yeah, I know how much you love these efficient market ones, right? So the strong form
Yes.
asserts that stock prices fully reflect all the information. The way I said that is nothing works.
All right. So, okay. Wrong form asserts prices. Yes. Well, so none of them, public, private, and future.
Yeah, this is Chuck just drives me nuts. It's the future we don't know, right? So it's public and private.
I was gonna say they've never said
Future,
future.
because with the future price, we don't know what the future information. I just I'm not going to mark you wrong on that just because I know Chuck is baiting you into the future and saying no. All the analysis, none of the analysis is based on
I would
the.
never have picked it actually
Yeah,
as
no, yeah, I just think this is him being kind of a jerk on this answer set.
so
By the way, and I think we could make an argument that we are trying to determine the future expectations of earnings or some kind of that. So. Nothing works. A investor purchased a bond with a 6% coupon rate exactly 3 months after its most recent payment. As a result, the buyer will pay $15 in accrued interest. The buyer will receive $15 in accrued interest. The seller receives the accrued interest. The seller will receive the accrued interest.
so so I believe I got confused the other day with this. The buyer,
I'll play buyer, you play seller. You
well, I'm
say
gonna pay if I'm buying it. I'm gonna pay
right.
who's
There
selling
you
it.
go. There you
Yeah,
go. I like it. That's good logic. So you're correct. The buyer's going to pay it.
yeah. And so then the seller would receive it.
Excellent. You're even better than the tutor. I was going to make a longer, convoluted kind of explanation, but I might even steal that. That's the simplest way to explain it. Buyers pay, sellers receive, right? Excellent. An analyst estimates, oh, this is called the Monte Carlo. This is another one where we might just want to assign it to the universe.
Yeah, I was gonna say the
But
Monte Carlo. I was
probability. Yeah. So anyways, it's
I had to look
we
it
estimate the
up.
stock has a 40% chance of earning 10%. We have a 30%, a 40% chance of earning 12.5%, a 20% chance of 31%. What is the probable return? So again, I would look at this as a test taker, my advice, and decide whether I'm going to try and set this up. And if so, how am I going to go about it? Or if I'm just going to guess B and assign the universe and move on.
Well, I think I know the answer only because I picked C, because I did that exact thing on my test, and I think I got it right.
Okay, so what are we going to do here? You're going to do it? If we're going to do it, what we're going to do is we're going to take 40% times 10. That gives us 4%.
Okay.
Right? And we're going to do it. So let's just take out our annotation tool. 40% times 10. And that equals 4%. And then we're going to take 40% times 12.5.
5, right?
Yeah, when we do that, we have 5%. And then we're going to take 20% times 31%. Boom. We do that. We get 6.2%. And then what we're going to do is we total that all up.
Oh, Steve, 15.
Yep. Good job. Yeah. So there you go.
And that one actually is pretty easy to do.
Yeah. Once you get, I think most of these math questions, by the way, you know, I hope I'm never a teacher like this, Jennifer, but I still blame my math phobia. I'm over it now. But I blame my math phobia on my third grade math teacher, Mr. Bruner. He was so bad that, it took me years to recover from my math phobia. And I don't know why, but I went to college. They told me I did trigonometry. I have no idea why that's a required class because, I'm not a math person. But, I guess they get balanced individuals and that. Anyways, the professor said that I took the first semester as an audit because I didn't feel like doing a bunch of math homework. And, the professor was kind of upset with me because she said, Dean, you could pass this course if you wanted to do the work instead of just sitting here. And I said, well, I plan on coming back next semester and doing it for a grade. I just want to see what it all looks like. And she goes, well, I'm not changing any of my tests or my quizzes. I go, well, I'm hoping not. I mean, that's kind of why I'm sitting here, is to collect all that stuff, right? And then, damn it, I accidentally, Jennifer, learned it because I did so much like calculating parabolas that one day I kind of like, oh my God, I actually did it without my notes.
Mhm.
And then another 50 times, and I go, oh my God, I actually understand it. So a part of the math is just practice, drilling, and rehearsing. And then, sometimes we can turn to a strength, like we just said, right? If you see this and then you start, licking your chops going, all right, here's one for me. I can do this. The neat thing about practical
You made it so
application,
easy. I was like, oh, why did I even I think.
yeah, well, in practical application, there's no debate what the right answer is too. That's the other thing about the math.
Yeah.
Some of these you go, oh, yeah, I don't know. You have a client with a margin account at your broker dealer. The market price of the securities of the client account should fall to a point where your firm has to ask the client for additional funds. Oh, that's never a good call. It is.
Okay, so on market price, it's maintenance margin. Well, I got this
Yeah,
wrong.
to maintain your account. I'm going to sell, yeah, right on. Margin calls are calls for initial money.
Yeah.
So, that's a call for initial money. An analyst uses the dividend growth model
There we go.
to assist in determining the appropriate stocks to recommend. The analyst would consider all of the following except. I kind of like it. Again, it's not asking you to do the math, it's asking you to recognize the inputs.
Well, we want to figure out the growth.
Yeah, that's exactly.
The required rate of return.
We definitely need a required rate of return. We need the current dividend because that's what we're going to use as our base to decide where it's going from there.
So market capitalization, are they saying that?
Yeah, well, the market cap is, remember, the market price of the stock times the number of shares outstanding. That has nothing to do with it.
Yeah.
Right.
They just baseline already had the three
Yeah,
of
and
them.
then remember what we're trying to get here, remember, is the present value.
Yeah.
Right, and then it's either gonna be positive net present value, good deal, or negative net present value. An agent has recommended investments in the XYZ fund family to his customers for 10 years. He's referred by one of his customers to a prospect who inherited 500,000 as a beneficiary of a life insurance policy. The prospect tells the agent she's never invested in the market and is risk adverse and wants safety of principal to be the first priority with liquidity second. So safety of principal. The agent recommends the following. 200,000 shares of the government bond fund, B shares, 150,000 B shares growth and income, and a liquid reserve money market of 150. The recommendation is
Safety of principal. And then what is second? Looks good.
yeah. So what is this thing? He says never vested, risk averse, wants safety of principal, and first priority, and then liquidity second.
they're not very good then.
Yeah.
Yeah, okay, so not suitable, unsuitable. And I guess the only one is D.
Yeah, right. I would think because we didn't address the large cap growth fund is what throws it out of whack.
Yeah, as soon as I got to that, I went, whoa, no, I don't think so.
Purchasers of options can have a number of different objectives. One of your clients who is a soft drink fan already has a long position in KO, that's Coca-Cola. What would be a possible reason for this client to go long a Coca-Cola call option?
Either one's to protect or make money, right?
Well, yeah, we could use protect, but if we're protecting, it wouldn't be a call option, it would be a put option.
Well, I was just saying, I need to figure out if he
Yeah,
wants.
that's right. So,
Yeah.
by the way, but you're on the right track because it can't be A because you're buying something, you're spending money. So to generate additional income, you got to be selling the option. And B would buy a put, so B's.
Yeah. B,
I'm sorry?
not B, owning a long call on the stock.
No, it's not a hedge because you have to have a long put. If it goes down, the long call does you no good. You're still losing money on the stock.
Wait, we're already long the position.
Yeah. What you use it for, let me give you an example. So it's actually D as a dog. So Jennifer, don't tell anybody, but I didn't have $20,000 to buy 1,000 shares of the stock at 20. I was afraid that by the time I had the 20,000, it would move away from me. What I did have is 2,000. And so what I did was bought 10 of the 20 calls for 2. I established the choice to buy 1,000 shares at 20. That way, I've locked in my price to acquire those shares. And so when I got the $20,000, then I exercised. So I ended up paying 22 for the stock, 20 for the stock, 2 points for that call option. I'm out 22. So this would allow the customer to buy more Coca-Cola at a set price. So the answer here is D. And we use long calls
Oh,
to
I see.
purchasing the stock, right? So long calls a way to lock in the price of that stock and not have to buy it today. And then you can see what happens, right? I said, well, let's buy a call contract and see what happens. The hedge here would be a long put. And that would be where D would have been the answer is if he says your customer's long Coca-Cola and he wished to protect against a big price decline, then we would buy him a put. Right. So I wouldn't worry about it. It's another one of those 65s I think is tough to decide, like if it's balance sheets or it's options. It's so hard to find the right balance of, the number of performance opportunities versus the sweat equity investment you have to put into it. And I know you are working hard. So, it's kind of hard to decide some of those areas. One of the most important benefits of investing in an index mutual fund is
Most can't buy them on margin,
yeah, you can't buy any mutual fund on margin.
so that's out.
That's correct. All mutual funds have the same liquidity, right? Because you can bring
Yeah.
your request within 7 calendar days.
Stock. I'm gonna go with a very low expense.
That's exactly why you buy them, right? Lower cost structure, more tax efficiency. Right on. A fundamental analyst researching a stock is concerned with all the following except.
Fundamentals, they companies. Oh, so a volume of shares traded, that's a technical.
Perfect. That's exactly right. An investor would enter a buy stop order to hedge against.
um,
By the way, test taking trick, you know it's either B or D because they say opposite things.
short stock position.
Excellent. I wish you just give her that little question in your voice. You have this little like when you're saying certain things like, is it a short stock position?
Well, it's like,
Yes, it is. No.
well, I know it's not C.
Go out in flames, man. Pretend to fake it till you make it, man. Say, hey, it's a short stock position.
Okay.
I had a guy in the chat. Every time I would ask a rhetorical question, chat, he would respond like with kind of like your voice, but he would put short stock position with a question mark. And so finally, I told him, I said, "Listen, moving forward in our class, I don't want to see any more question marks for you. I want you to put short stock exclamation point. Now I'll know it's a question mark, but that's where we kind of want to get, right? So
Okay.
yeah, go ahead. You gotta have confidence." Carmen LaBianco, who has been highly successful investing successful business, has a 30-year-old son. The son has been quite a spendthrift. I think that's a bad thing. I think spendthrift means he's,
He doesn't know how to handle his money.
yeah, I think that's what it means. He's at the club, I guess. I don't know. Well, Bianca is afraid the son will not be able to live within his means. To protect this from happening, he places $2.5 million into a trust for the benefit of the son. To provide added safety, he arranges for the Amalgamated Bank and Trust Company to have total control over the assets. In this case, which of the following is not correct?
Okay, Carmen, yes, he is the grantor. Um,
By the way, we know it's either B or C because they say opposite things. You can't be both.
have control over the assets.
So what is not correct? You told me that Carmen's the grantor. You were correct. This is asking not correct. Carmen's son is the beneficiary. We know that to be correct.
So Carmen is the trustee. It's not correct.
That's right.
Did I say it?
I kind of like that question because you're not going to get too many trust questions, and they're kind of like that kind of a question. Where I call it the cast of characters. An investment advisor would be most likely to be the contraparty to a trade when acting as.
Well, the opposite
That's right. So I'm going to take the other side of the trade.
is the principal.
Excellent. Good job. That's exactly correct. Under the Investment Advisor Act of 1940, for which of the following is an investment advisor required to disclose the clients the amount of commission he will receive?
So he does need to disclose commissions on recommended
Yeah,
security,
that's right.
commissions on insurance
Yeah,
sales,
absolutely.
incentives from the issuer of recommended
All
security.
sources of compensation, right on. In search of higher returns, many investors have turned to alternative investments, such as structured products, non-exchange traded structured securities products. Typically,
Well, they're definitely not as liquid.
that's definitely correct, right?
They're trying to add these out. Some form of embedded derivatives. They're not FDIC insured.
That's for sure.
It's not good for conservative investors, so it's
There
got to
you
be
go.
B as in boy.
I love how you attack that process of elimination. You're absolutely correct. Those are trading products, right? And, they're heightened suitability on these things.
Yeah.
Right? They're using futures to get that return. Becky Biggins is an executive, has an executive position with a large corporation that covers her under the defined benefit pension plan. This year, Becky's salary will top 435. Wow. Lucky Becky. Becky has no dependents. Wow. And wishes to maximize funds that she can accumulate for retirement. Becky could, so she's seeking to put some more money aside.
I think she makes too much for the Roth IRA.
That's exactly right. So 4 is out for poor Becky.
Maybe,
I
yeah.
don't feel sorry for Becky. 435. Come on, Becky. You don't need no stink on Roth.
Oh wait, so not contribute. Becky could right. So not contributor Roth IRA.
So
So
Becky could not is true, right? When you get caught up, put TRF, right? So not contribute to a Roth IRA is true. And this says Becky could not contribute to Roth IRA. True. So that is part of the answer.
okay, so A and B. Got it. Okay.
Right. Right. So you're saying A and B? What? Yeah, there you go.
Just saying, so Becky, so
Yeah, I get it. So you're saying I need 4. So now I'm 50-50. I love it. That's exactly right.
okay. So uh, I think she can contribute, but not deduct or
There
contribute.
you go. Excellent. 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 A securities analyst stock selection method is to begin by looking for superior companies, regardless of their industry or sector of the economy. I like this one. And so doing, the analyst is using.
So I was doing companies, industry. The bottom up.
Right on. If we did it the other way, economy, industry, stock, it would be top down. Which of the following could not participate in a Keogh plan? I haven't had anybody tell me they see a Keogh plan in years. Senator Keogh's long dead. We now instead have what's called a solo 401k. And this is asking who cannot.
So 401k is for the
Yeah, there's the replacements for Keogh's. So solo 401ks.
self-employed.
Yeah, right. So it says, boom, who cannot, right? So if I have a Keogh plan or a solo 401k, I do have to take care of my employees just like I take care of myself through that 401k. Self-employed, yes. The spouse of the self-employed who works for the business, yes. So the answer here is who can't participate in our Keogh. Now our solo 401k is a limited partner.
Yeah, A.
Right. So it's A because they're not actually an employee. They're not, doing anything. You receive a note from your firm congratulating you on passing the exam. Hey, woohoo! And indicating it's received a notice from the administrator. Your registration is effective. At this point, you could not. Oh, that's a downer. Yeah, so
Gotta
I
know
thought I
that.
was gonna say, hey, let's start making some money. And they're saying, not quite yet, perhaps. Oh, let's see what can you do when they say, hey, Jennifer, your testing journey has concluded.
Oh, well, you can't,
Oh God, no, right? I mean, they're gonna revoke your registration right out of the gate. Right? Hey, I'm finally approved. With respect to taxation, an investment advisor rep should not.
draft fee, draft tax and estate doc.
Yeah, we're not attorneys, we're not accountants, right? I used to tell my clients, hey, I'm the idea guy, I'm not the numbers guy. That's your accountant, that's your attorney. Do I have a general understanding of tax implications? I do. Do I have a general understanding of some legal stuff? I do. It used to drive me nuts, by the way, when my clients didn't want to spend money on attorneys and accountants. I'm like, particularly like when they're rich, I'm like,
Yeah.
why don't you want to get help? Which of the following transactions would be included in the uniform securities definition of an exempt transaction? So I don't tell. I think of exempt securities as a noun. It's a list of things. I think of an exempt transaction as a verb. You know how we're selling it is where the exemption comes from, or the safe harbor comes from.
Bank liquidate stock pledged for a
You
loan.
should definitely know that that is an exempt transaction.
So
Another
it's,
way to think about that, Jennifer, is the Uniform Securities Act, the state administrator has no authority or jurisdiction over Roman numeral one. If I'm a lender and you owe me money and I sell securities, I have no worries about the Uniform Securities Act.
an offer to purchase.
So you need one for sure.
Right, so that's, it can
And
be
that means
B
you're
or
taking
C at
two.
this point.
You got to take two.
Oh, well, we gotta take two. Okay, so
So
three
now,
isolated,
yeah,
non,
now, by the way, if you take three, you're taking four. So you're almost there, right? Now you just got to decide if you're going to say three is exempt, because if so, you're taking
yeah.
C, or three is not, in which case you're taking B.
So an isolated non-issuer transaction.
You know, what does that mean in plain English? That means a secondary transaction. That's what non-issuer transaction means. So secondary transaction. Isolated means there's no pattern.
Well, why would that be exempt?
Well, it is because it's not part of this, an isolated non-issuer transaction. Isolated means I'm at the club. I have a partnership interest. I sell it to you, fellow club member. I'm not a broker dealer. That transaction is exempt. Now, if I'm at the club every week selling securities to fellow club members, well, then that's not going to be exempt.
The sale of pre-organization certificate.
By the way, even if you missed three, if you were struggling with three,
That's why I was going to
well,
four.
I was going to say, there you go. That's exactly what you should do as a test taker. So now you say, okay, well, I still got another shot here, because if I say four is, that takes care of three. And if I say four isn't, we're back to B.
Yep. So C.
You're correct. An individual has been employed by a broker dealer to make cold calls to solicit prospects for the firm's new wrap fee account. Under the Uniform Securities Act, it is true to state that this individual
Broker dealer. C is not true.
That's correct.
D is not true.
That's correct.
I don't know why he would be called investment counsel.
Yeah, that would be a firm, not an individual.
Yeah, so, hey,
Right on. Love how you attacked it. You're soliciting, you got to be registered. Opening a margin account involves significant documentation. Which of those documents discloses the interest rate charged by the broker-dealer, including the method of interest computation and situations under which interest rates may change?
margin account. So the, not sure exactly what the credit agreement is, but loan consent, that's about loaning out.
That's where I say, can I lend your securities, Jennifer, to my customers who wish to establish short sales? And you say, well, Dana, I think it's in my best interest to help people go short stocks I'm long. And I say it's not. And that's why the loan consent form, Jennifer, is optional.
Right. So I guess I would go with my gut and say it's a credit agreement. Is it
Go with
similar?
your gut. Please go with your gut. Always go with your gut. The hypothecation agreement is where you say you understand you're pledging your
I
securities
knew it
again.
wasn't that.
Yeah.
And I've never heard of this interest
Yeah,
computation.
don't go with things you don't know. Stick with what you know, right? So yeah, that's just a distractor, and they're very good at making up wrong answers that sound good. So if you don't know what it is, then you better not take it as an answer, right? When a bond is selling at a premium, a bond callable at par will.
See, have a yield to call that's less than the yield to.
This is testable. Do you have your
I'm gonna
teeter?
go with C.
Yeah, right on. Right, your teeter-totter seesaw. Yeah. When an investor owns a convertible security, where upon conversion the account value will remain the same, it is considered that the convertible and the common stock are selling at. Well, that's a weird question.
Investor owns a convertible security.
I think the key is the account value remains the same.
Parity.
Yeah, that's equal. Parity means equal. So that weird phraseology, but yeah, that's what that's about. David is registered as an agent in states H and M with Stanley Securities, broker-dealer registered in every state. He would now like to register in state W. In order to do so, all the following would be required, except.
Okay, so he wants to go to state W. Everything is true, but okay. A is true.
A is definitely true.
I think B is true. Well, you gotta file an application. Okay, so passing state W's exam, that doesn't make sense because
No, you thank God. You only got to take one exam. If every state made you take a different exam, oh my God. Right? You're 65. Good news, Jennifer. Works in every state. So does a 63. That's the good part about the North American Securities Administrator Association. They've agreed they will all honor those exams. Now, P.S. I was reading Ricketts' biography memoir, and he said that he can't get into the business when we didn't have NASA, and he had to literally take every state's version of the test. I'm like, oh my God. I felt like writing him and go, What year was that? Because I go way back. I don't ever remember that. But no, 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 thank God. Poor insurance agents. I don't know anything about insurance, but my insurance friends tell me that their insurance registration don't work state to state.
No, I have it as well. And you,
Yeah, and then I've heard people, my friends who are attorneys, tell me that they can't practice law in any state. That they pass a particular state's bar, and if they want to
yes,
practice in another state, they got to go take another exam. Like, oh my God. When it comes to issuing a security, a debt security, which of the following features would generally enable the issuing corporation to borrow at a lower rate? I like this. What is a feature you can add to your bonds that would allow you to raise money at a lower rate?
okay, so lower rate of, oh, the convertible.
Yeah, you say, Dean, this pays a little less than other bonds I've been looking at. I said, well, yeah, but it's convertible. You can convert it in the common stock.
So the answer cumulative.
Yeah,
Is
that's
that,
preferred stock. That's a really bad miss. That
yeah,
cumulative doesn't even
I was
go.
like, it's not even, we're not even talking the same.
Yeah, it's not a debt security. Cumulative is a preferred stock equity security, right?
I
Callable, remember, is
I did that
disadvantaged.
a lot on the test last time. I feel like I saw a lot of
Yeah,
cumulative.
yeah. Well, preferred is there, preferred stocks. And then callable is a disadvantage to you. You say, Dean, it pays a higher rate. I say, yeah, because it's callable. Your client Jane died, and her 35-year-old son Patrick is the beneficiary of an IRA account. There was 750,000 in the account at the time of her death. All the contributions were made with pre-tax dollars. 10 years later, the account has grown to 1,200,000, and Patrick distributed all the money during that year. The distributions will be this. I have on debrief had a couple people tell me they had to deal with this circumstance as a test scenario.
10 years later, the account.
Yeah, so the distributions distributed money during all of the money during that year. The distributions will be taxed.
Well, for sure. Um,
Well, yeah, but then now we got to answer how are they taxed?
well, A is not right.
That's correct.
B is not correct. Government. I'm going to say D, tax on the amount withdrawn. And
You're correct. That is exactly right. And this is a good one. This is definitely on the test. And sometimes when there's a good one like this, I like to write that QID number so I can share with others. That's a good one. And you are correct. And that 10 years, what people tell me they see is the 10 years. Here it's given information. Yeah, but that you should know they have to do that in 10 years.
well, they have to take about 10th year.
That's right. Unless it's a spouse. Investors looking to minimize the effects of taxation on their investments would probably receive the least benefit from. Okay, looking to minimize. So we're looking for something that's not tax efficient. I think this one's kind of tough.
Okay, I'm
Can we eliminate? Can you do process elimination? Can you eliminate two as being tax efficient?
yeah. So A is tax efficient.
That's right. And
The corporate bond,
well, corporate bond, you're going to pay taxes on the interest you're receiving. A
right?
growth stock, you're just watching it go up. That's not taxable. The capital gains tax is a transaction-based tax. If you don't transact, you don't pay. So watching my NVIDIA go from 200 to 1,200 isn't taxable. So C is pretty tax efficient. This drives my progressive friends nuts, right? Larry Ellison, even though he's worth 80 billion, is never paying taxes, right? Because he never sells any Oracle stock. Right. So C is tax efficient. So now you got to decide what is more tax efficient, because remember, it's asking least. Is it the corporate bond or the apartment building? Where you're going to get more tax benefits?
I guess I would, well, the apartment building is a lot of tax. Sell it, but that's not what it's saying.
That's what it's saying. But remember, if we form a partnership to buy apartment buildings, said apartment building,
Oh, okay.
apartment buildings have a useful life.
Okay, so the least benefit is the corporate bond.
That's right. The apartment building, remember, we might get depreciation
Yeah.
that would shelter the rent we're collecting, right? If I built this off-grid place, and it's such a different neighborhood with different cast of characters. Like I find fun, kind of humorous. And anyways, Jennifer, I'm probably the most sophisticated guy within 50 miles. But anyways, my guy who delivers my water tells me that there's a piece of land in the little town and that he's going to buy it and he's going to build an apartment building. And in my own mind, I'm thinking he has no idea how to form a partnership or how to go raise capital. And can you would be more efficient to buy an existing building? I was kind of like thinking, Jason, let me pour you a scotch here and let's just talk about this for a minute. Not a good idea. Stick to the business.
When did you move to Las Vegas?
Yeah. Oh, Las Vegas. I've been here now 10 years. I moved here from San Francisco. So, but my brother first went off grid. He bought 5 acres out in the middle of nowhere. So I said, well, gee, sounds like an adventure. I'll buy 5 acres next to him. So I bought the 5 acres and we built these cabins and I got a container with a new studio. And so, mom is retired and I take care of mom and she wants to move out there. I said, Mom, we can't move out there because if you slip and fall or you have a medical problem, there's not a hospital for 200 miles away. I mean, here in Vegas, I call 911. She made me promise not to tell my brother, but I told her, why are you in the garage? And she tripped and fell. And, we called the fire department. She's fine. But they came within 2 minutes, sirens picked her up. And she goes, she can't tell your brother. I go, no, Mom, that's what I'm telling you. If we were out in Seligman in that cabin and you fell, I could probably get you up, but, and then we have to drive you to Flagstaff or Kingman or somewhere else.
My parents have 300 acres in Central Cal.
Oh, wow. Where at? I used to live in Mariposa.
Okay, they're
which is the Sierra foothills, like from Fresno, about an hour east of the foothills.
20 minutes north of San Luis Obispo. But
I know. Oh, beautiful. I grew up in Paso Robles.
Okay, yeah. So Creston. Have you heard Creston?
Yeah. Crazy. 300 acres.
Call 911, they came and find you. They live on a dirt road.
Yeah, well, that's probably there's upsides and downsides, right? 300 acres. Wow. A working group convened by NASA has developed a model fee disclosure schedule to help investors better understand costs. The template has broker dealers disclosing which of the following fees.
Schedule. Brokerage exposure.
Yeah, so this is a broker dealer. So remember, broker dealers don't charge advisory fees.
I was just gonna say, so A's out.
A's out. Broker dealers charge markups and markdowns and commissions, but those would not be on the disclosure. That would be on your confirmation.
Account closing fees, though.
Right on. I wouldn't worry about account closing fees, but whether it's wire fees or transferring and shipping certificates, that fee schedule has to be disclosed to a customer. And the most important testable item is we change any of these fees, we have to give you 30 days advance notice because this might be the straw that breaks the camel's back, right? So, if I'm going to raise my wire fee from $30 to $40, and then the other test question is this template, you can use tabular form, you can use narrative, tabular, you can use a chart. And then whatever method you're using, you again have to disclose the limitations. So narrative would mean I tell you a paragraph about why my wire fee is going up. Charges that shows you the old one and the new one, right? One of the differences between call options, rights, and warrants is that.
Difference. Oh, corporation can't issue call options on its own stock.
Yeah, one of the differences between call options, rights, and warrants is that corporation can't, yeah, I like it.
I didn't read the
Definitely
other,
know that rights are short-term, not long-term.
yes.
Yeah, you're bullish. I'm just checking to make sure we don't have a better answer. Warrants, nope, or have a strike price above. You are correct. If a pharmaceutical manufacturer's stock declines because the FDA has doubled the period of time required for clinical trials before any new drug may be released to the public, this is an example of
Is a change in the loss or regulatory risk.
right on. From your meetings with Avery, you realize there's a tendency to follow the actions of a larger group of people when making financial decisions. It makes no difference if those actions are rational or not. Choose the behavioral finance theory that explains Avery's behavior. This is testable. All of these are testable.
So follow the actions. Hurting.
Right on. Overconfidence is hubris. Anchoring is, like you have a position that's been in a family for generations and they won't let it go. Confirmation bias is it's always worked for you in the past, so you assume it's going to work for you in the future. Client is considering the purchase of an American depository receipt. She's looking to further diversify her portfolio. Which of the following is not a feature of an ADR? Which is the following is not a feature of an ADR?
Okay, they not a feature. Well, they are not.
Yeah, so something that's not a benefit.
Well, D says they're not subject to exchange.
And they most certainly are. Right on. That's very testable. Nailed it. If an investor was of the opinion the market was going to have a bad day, to maximize the investor's gain, you might recommend there's a couple pivots here. So, I got a 50-50 and then I got to pull the trigger on one of them. And I went back to read the question again. This is testable, by the way.
Well, I'm gonna go with my gut
Yeah,
on
I like it. Your gut's been pretty good to you so far.
because there's not enough information to do the ETF, so I'm gonna go with the selling a call option.
Oh, no, 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 no. Selling the call option would expose you to unlimited risk.
Oh, that's right.
That would be a big, that's one of the worst. That's
So
we're on question 98, and Jennifer, that's the worst mess you've had so far. Right. So
an inverse ETF.
there you go. We want something that goes the opposite direction. So
Yeah.
now,
So that's where then it was like, okay, well, I know you wanted to get the
yeah,
opposite.
by the way, maximize gains means it can't be a call either because you're just going to get to keep the premium. So it's an inverse ETF. Now we got to decide, do we want the regular plain vanilla inverse ETF or do we want the leveraged ETF that'll move even faster?
Well, if we're being aggressive, then we would do the inverse leverage.
Yeah, right on, right. That's where I went back to read maximize. Right, leverage would go the same direction.
Okay.
Yeah, right. This is where I went back because I wanted the inverse ETF, but then I wasn't sure which one I was going to pick, and then I went to the maximize, right?
Well, then that's what caused me to go to the wrong answer.
Oh, well, there you go. A client who has a margin account is out of town for a week. The securities in the client's account fall dramatically, which requires the client to make immediate deposits, maintenance call. Which of the following can you, the agent, do to assist the client?
Nothing. Where does the client's account fall directly? Yeah. Reasonable attempt. Yes, arrange. A.
Yeah, that's it, right? Sorry, Mike. I'm not gonna, that's all I can do. Patrice. Patrice has an investment portfolio with the following securities. Portfolio's actual return was 9. The market return was 12. The standard deviation was 4. The market standard deviation was 7. The portfolio beta was 0.65. The risk-free rate of return was 3. What is her portfolio's alpha? And did she outperform the market? Now, I think the first thing I would do here is say, oh my God, there's all kinds of information that is not necessary to answer this question. And so what I need is what is the necessary information?
The necessary information is the risk-free rate of return.
All right, hold on, let me get on my annotation tool so we can kind of highlight what we need. You are correct. We're going to need that.
Need the beta,
We definitely need the beta.
a market return, the actual market return,
Yeah.
and the portfolios.
Yeah. Now this is just me. You can do this any way you want. It's a buffet. But what I like to do is whenever I get the risk-free rate of return, I just like to immediately take the 9% minus the 3% because that represents what we could have got without risking our capital. So I just like to do that right out of the gate, and I like to turn that into 6%. And I like to do the same thing for the market return, right? Because the market return, again, we could have got 3% without risking our capital, right? So kind of a little bit of a, thing to kind of understand here, but what that risk-free rate of return is about is not risking our capital. I mean, how silly would it sound if I said, my goal, Jennifer, as your investment advisor is to do 1% under the risk-free rate of return? That wouldn't make any sense.
Yeah.
Now, that could be a treasury note, it could be a treasury bill, it could be whatever. Here it's stipulated that it's 3, right? My real estate friends use a treasury note. Okay, so now what are we going to do next?
Gotta use the beta.
Yeah, so the beta, so we have our beta of 0.65. And so what are we going to do with the 0.65?
Multiply it by the 9.
That's right. So 1.65. And when we do that, 229.65, I get 5.85. Okay, what are we going to do next?
And we are going to subtract
What are we going to subtract?
6 minus the 5.85.
There we go. Whoop. 6%. And I'll put that here and I'll put a minus sign. And so based on that, what is going to be your answer?
15.15. Right?
So we got 6. And we subtracted, we did our beta of 0.65. And so our expected return was 5.85, and we got what? 6. So are we happy or are we sad?
Okay, so our market return was 6. Hold on, which is that what we did at the top?
Yeah, what I did immediately, so you can do it any way you want as long as we come with the math. I
Yeah.
like to immediately say when they give me risk-free rate of return, I just say, okay, that's what I get for not risking my capital. So of the 9, I could have got 3 without doing anything. So I really got 6. The market gave me 12, but I could have got 3 without going into the market. So that's 9. My beta was 0.65. And so 0.65 of the market return would be 5.85. And we actually got 6.
We're happy.
We're happy. So that means we had positive alpha, right? So we know we have positive alpha. So that means B and C go poof. And now we got to decide, is it A or D?
But what's alpha from the market? A.
Right on. Right on. I don't know if it's, like I say, it's a buffet, take what you like, leave what you don't. But I like to just immediately, as I said, I don't like to have that whole convoluted formula. So what I like to do is instantaneously, I get risk-free rate of return. I just immediately deduct it. I deduct it immediately from the portfolio return, 9 minus 3, and the market return, 12 minus 3. And then I'm dealing with 6 and 9 out of the gate. Then I don't have to do, but again, as long as you come with the right answer, who cares? Good job. All the following statements regarding Ginnie Mae pass-through securities are true, except.
I do not know about A, so hold on.
Yeah, that's right. So you would table that. I like that. That's good test-taking strategy.
I know you get monthly income,
Right on.
are considered to be riskier. No, well, that's not true. Are considered the riskiest. I want to know passengers who accept. Well, they're not risky at all. So
That's right. Right on.
regardless, so it
Yeah, I
is.
mean, remember Fannie Mae and Freddie Mac have an implied backing. Ginnie Mae is direct backing. So yeah, you're right. That is not true. Individual has just received a bonus of $12,473 and wishes to generate some income without risking the loss of his capital. Assuming the client's in a low tax bracket, which of the following would be the most suitable choice?
Okay, well, if they're in a low tax bracket, it's not gonna be a municipal bond.
That's right. That's out.
Um,
By the way, A's out, right? Because growth stocks don't pay dividends.
right, so that's, my issue is bank insurance. Um, I would pick C.
Yeah, I'm with you, right? Because the public utility stocks are interest rate sensitive.
Yeah.
So even though they're defensive, they're resilient to the business cycle. Public utility stocks, they have a huge amount of debt in their capital structure, so they're interest rate sensitive. So I'm with you, C. Which of the following best describes liquidation when a company files for bankruptcy? So liquidation order, you got this right earlier, so I would expect you to get it right again.
Oh, yeah, do it with the way they stated there, we always just go with the
Yeah,
first.
liquidation orders. That means who gets paid
Unsecured
first.
creditors,
So 4 is first, so that means it's either B or C.
and 4-2, which one's that?
Yeah, 4, it's going to be 4 and 2. So we are done, right? Then your
Okay.
preferred, and then your common. What's the following true regarding ETNs? This is very testable. Exchange traded funds are equity investments. Exchange traded notes are debt instruments.
So C is not true.
C is not true. Yeah, it's definitely not true.
I feel like B is true. Let's see. Um, I'm gonna say B. I'm gonna go with my gut
D or B? B is in boy or D is in dog?
as a boy.
You're correct. Very testable, right? Because it's a debt instrument. So if the sponsor, the bank, has their credit downgraded, well, that would affect that. Very testable to know that ETNs are a debt instrument. Right? So that's very much a test question. An employee is offered a non-qualified stock option with an exercise price of 20. The option is exercised when the current market value of the stock is 30. The employee, I would expect a question, something along these lines on the test.
Exercise non-qualified.
So how are we going to tax you on that $10?
I'm gonna say D, tax on 10
Good job. Absolutely. That's exactly right. It's part of your compensation. An agent follows the recommendation of another agent in the office with an impressive performance record. And based on the security the successful agent recommends, the representative recommends it to all of his clients. According to NASA's statement on policy on dishonest and unethical business practices of the broker-dealer and agents, this activity is
Well, he didn't determine suitability for his clients, and the reason
that's
for
right. Remember, this is about no blanket recommendations because everybody's situation is unique.
A.
Yeah, right on. Which of the factors determine whether a person is considered an investment advisor under 1940? You should get this right because we have a memory aid device that's built upon this.
So 1, 2, and 3.
Yeah, A, B, C. Do you give investment advice? Do you tell people you're in the business of giving investment advice? Do you want compensation? When discussing the purchase of a scheduled premium variable life insurance policy with a client, it would be correct to state. You're not going to get many insurance questions, but every once in a while somebody gets a variable life question.
Okay, well, there is a separate account, and it is,
Yeah, that's right. I think you're on the right track with that separate account.
um, um, it's not B.
Not B. It's done annually.
So cash value of a variable life is not guaranteed.
That's correct.
He's out. I'm gonna stick with C.
It's actually D.
Is
Yeah, right. Because you can get the cash value of that money that's in the separate account. I thought you were on the right track. You can make flexible premiums, but that's not based on the separate account. This is based on whether you feel like putting
yeah,
money in.
okay.
So, I wouldn't worry about that one. Under the Uniform Transfer to Minors Act, very testable. Ralph wants to give some stock to his brother's son, Jose. Jose's father, Bob, is the legal guardian, but he's failed the NAS exam 11 times.
Ugh,
Which of the following is correct?
I have some factors. Why does it matter that you failed it? Ralph wants to give his brother. I'm gonna say A. Either Bob or Ralph can be the
Yeah,
custodian.
right on that. None of that stuff matters. You
Yeah,
definitely need to know one minor, one custodian per account.
yeah.
You need to know kids' tax ID number goes on the account. You need to know no margin on that account. Financial planners frequently assist their clients with budgeting. One can't really prepare a budget without knowing the family's cash flow. In preparing a family cash flow, all the following items would appear except.
Assets.
Yeah, that goes on your balance sheet. Excellent. A high risk investment strategy is the short sale of stock. Each of the following methods offers some degree of protection. So one of these things, except one of these things does not offer risk mitigation.
Okay. Kind of call on the short stock.
Say it again.
Buying a call in the shortstop.
No,
Stop.
that'll do it. I'll give you a choice to buy back the borrowed stock at a set price. A is wonderful. That turns it from unlimited risk to limited risk. As a test taker, you should have known it's either C or D because they say opposites.
Hmm,
Whenever you have two answers that are opposite, it's got to be one of them.
got it.
Because you can, if you say A, then you're saying C and D are both true in the same universe, and they can't be true in the same universe. The way I always say this trick, Jennifer, principal mutual exclusion. Socrates is a dog. Socrates is a philosopher. He's either a dog or a philosopher. He can't be both.
Okay, so it would be, okay, so except would be buying a put on the short.
It would be buying the put because that would be a choice to sell.
Yeah.
You need to be able to buy back the borrowed stock. So here you're buying a call, choice to buy back the borrowed stock, obligation to buy back the borrowed stock, bring in some premium, put in a buy stop to stop the loss. Yeah, that works. So
Well, hopefully I won't get very many of those.
no, that's the first one we saw like that, right? So I told you that's always a challenge. Like, how much do you want to spend on that? Expressed as a percentage, what is the total return? So let's just stop there. Total return. The only two ways you're going to make money in an investment is from the income stream and or price appreciation. And so total return would be what you make from the income stream. And a stock, that would be the dividend. And a bond, it would be the interest, plus what you made from price appreciation. So here it says you bought it 365 years, zero coupon bond. So that means we have no income stream. So the only money we're going to make is the difference between 95 and par.
$50.
Well, yeah, but they're asking you to express that as a percentage. So now you got to decide, you're going to always divide. So you're going to divide the $50 by something. And you've got to decide what you're going to divide the $50 by. Are you going to divide it by what you spent on the investment, or are you going to divide it by what your return 1,000 was?
On the total amount that you received, right?
No,
Total
you're
return.
gonna, it's based on what you invested,
So what
right?
you invested, yeah, 950
So,
divided by
well,
50.
no, well, yeah, there you go. So you're gonna take the $50, got the first part, the income stream. There's no price appreciation. We're gonna divide that by what you spent, 950. And I say you spent 950 to make a $50 return, and that is 5.26. Right? You were right, it's $50. So you made $50 on a $950 investment. So what it paid you, 50 to buy what it cost you. What it cost you was 950 to make that money. Right? It didn't cost you 1,000 to make the $50. It cost you what? 950 to make the $50. Right? Don't ever take B. That's just never right. Don't ever tell me on the test that you can't figure something out. Right? So life insurance policy that allows the policyholder overfund the premiums is
Miles over. Okay. Flexible premiums are universal.
so the idea of overfunding it. I'll give you a hint. Would to get the greater cash value growth.
Well, if they are flexible, you could add more.
That's right. So which one of those is flexible?
Universal life,
Boom.
right?
Yeah.
Oh, I thought you, okay, yeah.
Which of the following equations correctly shows the relationship between the items on a company's balance sheet? The classical balance sheet equation.
So D,
I'm sorry?
D.
D as in dog?
Yes.
You are correct. An investor's required rate of return is 6. The internal rate of return of the investment offered is 6.32. Then the NPV is kind of interesting. I think it's kind of an interesting way to ask this.
Okay, so. All right. Higher.
I kind of, I kind of try and oversimplify this stuff. What I mean by that is I just say, am I happy or sad? And if I'm happy,
You're happy, so it's positive.
yeah, that's how I go about it. So I was doing a live stream one time, Jennifer, and I said, "Listen, I'm proof that you don't have to be a mathematician or be good at math to pass these exams." I said, "Listen, in my career, when I have to do important math, because of course my career, there's sometimes the math is really important." I said, "I pay my friend Lee. He's the most brilliant guy I know, and he's probably made tens of thousands of dollars doing math that Dean doesn't want to do." And I always know that that math is going to be as good as any math on the other side of that transaction. Anyways, this guy in live stream said, "Well, you shouldn't be in our business if you can't do your own math." I'm like, "Oh my God." I said, "Well, geez, my friend, you have a major misunderstanding of our business. There's all kinds of brilliant math people who make a lot of money, and there's all kinds of brilliant math people who make no money. Then there's all kinds of people who have good people skills and don't know how to do math, and they make a lot of money." So
But you
everybody
have
stays in their lane, right?
the things that you don't want to do.
Yeah. So the administrator may deny a person's registration as an investment advisor rep if the person meets which of the following criteria. Wow. So they're going to take your registration away from you. Well, I say deny. Well, my bad. They didn't revoke it. They're going to deny it.
Okay.
I don't think it makes a difference, but
Well, for sure has a recent securities related criminal record. So that's
absolutely.
right.
Absolutely.
So I'm going to say 1 and 2.
Good job. Yeah, I think you should be able to reverse engineer that for sure. Serenity Strategic investment advisor registered in 4 states. I always immediately like to say state. So that means it's not federally covered advisor. That may or may not have anything to do with it, but I, from the get-go, like to establish what cast member is this. This is a member of our, I think of it as like a playbill in a play, right? They give me the playbill. There's my cast of characters. They tell me the acts and the scenes. And, if I get lost, I go, okay, who is that person again? So this is a state covered investment advisor. Most previous annual updating amendment showed assets under management of 108. Woohoo.
Ooh,
6 months later, 120. Wow. Unfortunately, several lives clients, oh my God, left. So at the end of the year, it's down to 94. Which of the following statements is correct? Yeah, they took us on a real roller coaster ride on this question.
yeah. Okay. So yeah, they do have to become registered with the SEC once they go over 110. I don't know if it's exactly 90 days. My gut thinks it
Well, you
is.
remember they started state covered and then they, went here and there and then where are they at today?
Oh, so today they'd be state.
Yeah. So, I mean, they never became federally covered. So,
So the whole 90 days things just throw me off.
yeah, it has nothing to do with it. It's just we should have applied the minute we went over
Out.
108, right?
8A is out. Uh, remain, no, he's out. So D,
Yeah.
as in dog.
Now, had they just, for hypothetical situation, if they gone to the federally covered when they were 108 and they went back to 94, they could remain because remember it would be 90, but they never became federally covered, right?
So
So,
is there a time frame requirement?
well, the time frame requirement would be updating your Form ADV, right? So, which of the following has the least exposure to inflation risk? This is very much a test question. What is the best inflation hedge?
I can hear you saying to base with inflation is common stock.
No, base with inflation is tips.
That's it,
And to beat inflation,
is the common stock.
yeah, very much a test question. I don't like the phraseology because it will be more straightforward, but they're flipping this by saying least
So that's
exposure.
how I was trying to remember, like,
Yeah, they've kind of flipped the phraseology. With regard to taxation distributions from REIT, which of the following is true?
so going to say one is true.
One is true, indeed.
So that leaves 3 and 4. Okay,
That's right.
I'm going to say C.
You are correct. Which of the following actions by an agent would not constitute fraud as defined by the Uniform Securities Act? I don't know if this will work for you, but this is my how I attack. I say in my own mind, fraud is the willful attempt to deceive.
Okay,
Right? So that means intention, right?
okay, so D is fraudulent.
Well, again, let's go for willful attempt to deceive. So executing trade a customer without the customer's knowledge. Yeah, I think that sounds pretty bad, doesn't it? What are our other choices? We have anything that sounds worse? I always like to see if there's not something that may be worse than that. So it looks like they all look bad. So I just got to decide which is the worst one. Oh, not constitute fraud. Now it becomes easier, right? So one of these things is in the normal course of business. And then the three of these things are not in the normal course of business.
Well, purchasing a security for the account of a client.
Yeah. And then you don't do it ahead of him, you do it after him. That's fine. Right? You eat your own cooking. You eat your own cooking. Which of the following industries is most exposed to regulatory risk? I think here PG&E, right? Does PG&E have regulatory risk?
Public utilities.
Yeah, right. Because they can tell you what you can make or what you can't make and what you can charge back to your customers and what you can't charge back to your customers. I told her mom loves the off-grid thing, so I have to remind her that I installed Jennifer. I told my contractor guy, I said, listen, I don't want to be off-grid and not have all the power I want. So, I'm going to overdo my solar system. I want to, lithium battery. I want these panels. So mom loves being out there because she knows that there's no cost except what I already spent in thousands
Right.
to
Yeah.
run the air. And then we get back to Vegas. I got to remind her, Mom, the house is not set up on a solar system. If
Right.
we're chilling this place down to 50 here, it's going to cost us because we're on the grid, right? Off grid, we don't have to pay a utility company. We're our own utility. One of the differences between broker dealers and investment advisors is disclosures that must be made when acting as a principal or agent in a transaction with an advisory client. In the case of a firm registered in both capacities, those disclosures would not be required when
I'm gonna say C.
I like it. Too long to be wrong.
Oh yeah, you like that phrase.
Yep. Private equity fund would most likely be structured as.
Private equity. Limited partnership.
Right on. In general, the business continuity plan of an investment advisor should provide all the following except. So what is not a requirement of a business continuity plan?
They can't insure securities.
Yeah, how are you going to do that? Right on. There's nobody can do that. Form PF must be filed by. Do you know what PF stands for? I wouldn't worry about it if you don't. That's a private fund. A private fund. So PF is a private fund, like a venture capital fund, a private equity fund, hedge fund.
Okay, so this one is about the 150 million.
Yeah,
Okay.
right on. Actually, that's absolutely right on. So A or C.
So more than 150.
Right on. It's over because over means you got less of a risk than under. Which of the following are subject to the holding period requirements under 144? So they're not asking us about volume limitations here. They're asking about holding period. So what kind of securities do you have to hold for 6 months?
Insured securities held by. It's about the unregistered securities.
Yeah, that's right. So unregistered securities are the ones that have a 6-month holding period.
3 and 4.
Yeah, well, 2 and 4, right?
Oh, sorry. Yeah.
2 and 4. You said it correct.
Yeah.
Under the Uniform Securities Act, the administrator has the power to deny, suspend, or revoke registration if it's in the public interest, and which of these are true?
These are hard.
What's that?
Administrator of another state has revoked the issuers.
That's correct, right? If they have a problem with you, then I have a problem with you.
So that one popped out, but officer of the registrant has been convicted of a securities.
Yeah, those sound like the most serious kind of problems, right? Right on. By the way, keyword here is non-material, so that means we made an editorial decision not to put it in there. Strategic Capital Management is an investment advisor registered with the SEC. Registration of the advisor rep would be required of an employee who.
Rights recommendation. Not be.
Yeah, this is kind of a strange one, but yeah, you're correct. We got to figure out which one of these people is going to have to take a 65, right? I'm joking, but sometimes, kind of go back to that and say, okay, which one are these people?
So A.
Yeah, right on. It doesn't matter. It's the bank. It's, you're giving recommendations. And then remember, we have the whole life is not a securities product, and then clerical staff. Who cares? Investment advisor rep recommends a client purchase 50,000 U.S. Treasury bonds maturing 20 years. According to NASA's model rule, which of the following statements can you legally make?
Oh, I can't. Oh.
So 3 of these things you cannot say. 1 of these things you can say.
Well, you can't say there's no way you can lose money.
Definitely can't say that.
No, the US government does virtually no loss. Can't say that. You can say C.
Right on, good job. All the following statements regarding futures contracts are correct, except. So futures contract.
Ugh. Okay, so I'm gonna say D.
Completing, yeah, you're right. The A, B, C are true. D is not true. You can just offset the transaction. When computing a company's quick ratio, I like this one. Which of the following assets is not counted?
Quick ratio. Well, you exclude inventory.
Right on, no inventory. Current assets, less inventory. Right on. Under both state and federal law, the definition of investment advisor excludes certain publishers. To qualify for the exclusion, the publication must meet which of the following criteria? So I kind of think when I hear this question, I think general circulation is kind of where I think.
Okay. All right. So right. So to qualify for exclusion, it must be of general and impersonal nature.
That's right. I like that. That's 3 is correct.
Not 1 and 3.
Excellent. Excellent.
C.
When the 91-day Treasury bills 3, the investor decides to purchase a 20-year corporate bond at par with a coupon of 8. If the corporate bond does not pay as expected, the investor's potential loss is considered.
A.
Well, opportunity cost is the difference of going the other direction, right? The other direction would be we buy the treasury bill,
8% of the corporate.
right? So that would be the opposite direction. But you're correct. The opportunity cost is the difference between the two, right? It's the difference between what you would have got risk-free versus what you're risking. So does not pay. If the corporate bond doesn't pay, the potential loss is considered opportunity cost. I kind of a funky way to ask that, but they would usually ask it from you bought the 3 instead of the 8.
Yeah.
Loss derived from limited partnership may be offset against income from
Other limited partners.
right on, but it stays over there, passive income, passive losses, right? Under the minimum distribution rules, Jason is required to take a minimum distribution of 10,000 in 2023 from his IRA. However, distribution of only 8 has been made. Assuming he doesn't correct the problem, what is the dollar amount of the penalty to be assessed in this situation? This will not show up on the actual exam, again, because it's a number that changes often, right?
They're required to take 10.
Yeah, it used to be 50, and now it's not 50 anymore.
So the 2,000 is what?
That's what we're dealing with, right? So what is the dollar amount of the penalty that may be assessed?
Oh, well, 2,000.
Well, no, not the entire 2. It's going to be 25% of the 2. right? So it's gonna be $500. So the penalty is 25% of the difference between what you were supposed to take and what you took. We're supposed to take 10, you took 8. So 25% is the penalty of the 2 that you didn't take.
That I won't have that one.
Yeah, I don't think you'll see that on the test because like I say, NASA doesn't like to go in their Q bank and have to remove questions for changes. So things that they know are going to change, they just stay away from. Right? Whether it's a gift tax or the unified credit, whatever the case may be. When they changed the RMD from 72 to 73, took months for them to make the change. A retired woman whose sole income comes from a portfolio of investments with a fixed rate of return is most affected by sole in a portfolio of investments with a fixed rate of return. That's interesting. I'm not sure what I would take on this one. Let's see what you would say, and then I'll tell you what I think the answer is. And then we'll see if we get it right or wrong.
So not income tax.
Yeah, I don't think it's going to be income taxes. I don't think she's worried about bearish market conditions.
Yeah, it's down to the last two.
And volatile interest rates. I don't think that she's trading the bond. So I think I would go for high inflation is what I would go for.
I probably would have done that.
Yeah, I think that's our best answer given that answer set. Which of the following would most likely be the most volatile investment over the short term? Well, that's kind of another phraseology that's kind of weird. This would usually be over the long term.
Yeah.
But now they're saying over the short term, what changes the most often in the short term?
Bond fund, the corporate bond fund?
Yeah, I think I would have gone for the stocks being more volatile than the bonds, but if they said least volatile, I would have gone for the money market. You're going for the intermediate corporate bond or the muni bond? You wouldn't take the muni bond under any circumstances.
Oh, no, I wasn't. Yeah, no, I was saying the corporate.
Because they'd have to give us an interest rate or something. I think the stocks are more volatile than the bonds. But
it's always so hard on
I'm
that.
with you. Judgment questions are always hard. An investor uses dollar cost averaging to purchase a mutual fund would, this is testable.
Invest the same amount of money each month.
That's right. That's what makes it work. And then remember, you end up with a lower average cost than those of the underlying shares. Under the Investment Advisor Act of 1940, a registered investment advisor who provides investment advisory services to individuals must
So, okay, I'm gonna say A.
You are correct. Did you take it because it's too long to be wrong?
No, I didn't think of that, but I
All right, let's see how we did. Woo! We didn't answer this one. Okay, let's go back. 112. Dean didn't hit the button. Oh, I must have just skipped that completely. I don't even remember looking at that. The terms mean, median, and mode are all measures of
central tendency.
Yeah, I think you got that right for sure. All right, there we go. So now we can submit. Wow. Now I helped you on a couple.
Yeah, you did.
I think I must have helped you on more than I thought if we got a 94. Wow.
Way.
Wow. You should feel good. All right, let's see. Yeah, I think we went over that one, right?
Yeah. That was my first one. I was a little nervous.
Yeah, you got off to a rocky start, but for getting off to a rocky start, you got to put it together. Yeah, we talked about that one. Yeah, that was a bad miss.
Oh,
Right,
yeah.
you know, 33 is just prospectuses. Right, so that was, I don't think we have many bad misses. Cash flow from operations, you said, yeah, that, not a bad miss.
Oh, yeah, that, I remember
I
that.
wouldn't worry too much about that one. Let's see, you said broker dealer is registered revoked, and you said, you said you get to park it with the state administrator. Oh, no, you don't. Right, you don't get to park your registration until you
Right,
figure.
oh, yeah.
What this is getting at is that if you don't have a broker dealer, you don't have a registration, right? I wouldn't worry about this one, but yeah, you were on the back side, right? So here, the reason you'd buy a call contract as a investment advisor is you're expecting money to come into the portfolio, but you don't have the money now to buy the stock. So by buying that call, you now have established what you can buy that stock for, right? Not a bad miss. Yeah, this one was
Oh,
oh,
what
how did we miss that one? Oh, that's on me. I think I hit the wrong button. I hit the wrong button. Like you said this right, and then I hit the wrong button. So that one's on me. Let's see. Yeah, okay. Those ones I'm with you. Judgment
right.
questions are always tough, right? Judgment questions are always tough. And so the stocks are more volatile. All right. Well, this is a commercial Zoom account, Jennifer. So this should be ready. I'll get it to you by tomorrow morning. I think you're testing what, Friday?
Thursday.
Thursday. So there's no red flags I see in your future. With your permission, after you pass, I'd like to share this. I'll certainly send you a copy. I'd like to share it on the channel with others to help them if you're okay with that. Yeah, after you pass, because if you don't pass, people will be asking, "Did Jennifer pass?" And you'll say,
Oh, I'm passing. I'm passing.
yeah. So let me stop our recording here. Where is the record button? More. There we go. Nope, we don't go live on YouTube.